In this module, you're going to learn about subdivisions of various degrees of trends and countertrends. So before we get started and learn about subdivisions, I just want to talk a little bit about the labeling convention. Now, in traditional Elliott wave, there's a really complicated and extensive labeling conventions for trends and countertrends. Let's take a look at this first chart, and this is labeling conventions of trends. Trends, impulsive trends, are labeled with numbers. So there can be many different degrees or time frames. So how do we distinguish them? How do we distinguish the subdivisions within the larger time frames? Well, again, in conventional Elliott wave, there's a complicated, extensive systems of cycles and primary and intermediate and minuet and minute and et cetera, of endless degrees of trends and endless labeling conventions. So I try to keep it real simple. I don't give names or specific terms of specific degrees. I keep it real simple. I usually have two, maybe no more than three different degrees that are labeled on a chart. Occasionally, if it's a long-term chart, there may be four, but that's pretty much the extent. So it's my approach is just so that we can distinguish one degree from another, the subdivisions of the higher time frame. And it should be visual, it should be obvious. Here's what I tend to use. These are the four different fonts and conventions that I use for. I can't imagine any time I'd have more than 4 degrees on a chart. Usually there's only 2. Major trends I'll have in a large font parentheses. Typically, let's call them primary trends. The obvious significant trends on any chart would be, and usually in that dark blue, fairly large font. And then all it does is just the font gets smaller. It's that simple. So let's take a look at what the data that I have on this chart. For instance, coming off this low, there's a significant advance. I've got that labeled a 1. And then we have an ABC. We'll look at corrections more in a minute to complete a 2. And then we have another significant advance. And how does that break down? Well, it's going to be a 3, obviously, but then it's going to break down. Remember, impulsive waves break down typically into 5-wave impulses. So all we do is use the smaller font, and maybe we'll change the color of it. Something that's just obvious that it's a breakdown, it's a subdivision within the larger time frame or the larger degree. So then we have a 1 and then a 2, and then we begin the wave 3 of 3 up. And look at it. It's obviously subdivided as well. So real simple. Just use a smaller font. So just another, again, 1, 2, 3, 4, 5 of 3 of 3. So there we're showing 3 different degrees of change, 3 different time frames, or 3 different degrees. I'll go ahead and expand this data a bit. So there we have all of the data up into the higher time frame wave 3, and it's actually broken down into, let me start back here. This is the wave 3, and here's the 1, 2 of 3, and then here's the 1, 2, 3, 4, 5 that completes the 3, wave 4 correction. The wave 3 itself was subdividing, the wave 5 itself was subdividing nicely into 1, 2, 3, 4, and then we got into 5 of 5 of 5 of 3, actually 4 degrees here, where the wave 5 of 5 of 5 of 3 subdivided nicely into 5 waves as well. So again, I keep it pretty simple, and it should be pretty obvious. So let me go back to this first advance. I don't have a name or a term for that. All is I want the viewer to understand is this is 1 degree and this is the degree that's labeled to it. This is a smaller degree. This is a degree, a label that is related to that degree, as is this, as is this. And then, of course, it's the ones with the similar fonts that are all related to each other. They're part of that series or that structure. So if we were writing about this different wave structure, how would we label one of the swing highs or lows and distinguish between where it is within the structure, within the larger time frame or the smaller time frame? Let's take what I got labeled here, this wave 3 high, and let's look up here to see exactly what this label, the full label, would be at this point. Well, we always start with the smallest subdivision when we label. So this is a 5 of the wave 3 of the wave 3. So it's the 5 of 3 of 3. We began the 3 back here where the 2 is. So it begins with the smallest to the larger. Another way to write it is wave 5 of 3 of 3. But this is the typical convention you'll see. And when writing about it, I don't use different fonts, different colors, or whatever. Just want to make it as plain and simple as possible. Labeling begins with the smaller time frame to the larger time frame. So let's move up a ways. This is a wave 3. So it's a wave 3 of what? Well, it's a wave 3 of 5 of 3. So we're beginning from this wave 2, higher time frame, wave 2 low. 1, 2, 3, 4, 5. And then it's the 3 of 5 of 3. So again, we begin with the smaller subdivision, how it relates to the next larger time frame, and how that time frame relates to the next larger time frame. Pretty straightforward. Corrections, or countertrends, are labeled with letters. And again, we want to make it obvious what degree or what relationship the different trends, the different swings or sections have to each other. So I keep it pretty simple, and again, I don't give these labels as to what degree they are, like if are they primary or cycle or intermediate, etc. The objective, because all of our objectives are practical trade strategies, is for the viewer to quickly understand what's going on, what are these wave counts, how do they relate to each other. So let's take a look at this data again, coming off of what I had labeled the wave 5 of 5 of 5 of 3 high. So he came down in A, B, C, and probably a higher time frame A. So we have a little different font, a little darker font, A, B, C correction. Again, probable wave B, and we can see that these two relate to each other. They're part of that structure. And then we have a decline, and it was a 5-wave decline, typical of a wave C. And this A, B, C, it turns out, was a higher time frame wave A. So it's labeled a wave A, and all it is a larger font, a different color, so you can distinguish that it's obvious a higher time frame trend. It's a higher time frame structure than what we're showing within that trend. And then we advanced into this high. I've got labeled as A, B, C, D, E, into the high, wave A high. Correction, wave B, another high to a wave C for an A, B, C, higher time frame B. A, B, 5 sections down into a wave C of 4. So pretty straightforward. And actually, I'm looking at this. This should not be there, should it? There we go. I got too many, put too many labels on it. So the whole idea is you can distinguish what how the different sections relate to each other and how they're subdividing and what the subdivisions are related to. Just obviously these are the smaller letters. They're not bolded, so they're of a lesser degree than the bolded letters. The capital letters that are a little larger font and are bolded are obviously a little larger degree than the other letters. And at some point, we may even see these in parentheses, which would even be a much larger degree. But you won't find more than, or rarely, more than 4 degrees on any chart that I'm showing. And the 4 degrees would probably only be if it's a very long-term, multi-year chart, looking at major swings. For practical trading strategies, we tend to only look at 2 degrees. We look at the degree we're trading and then one smaller degree to identify the subdivisions to get an understanding and a setup for when that degree we're trading is over and ready to formulate a specific trade strategy. So if we're writing about this different wave structure and different points within the wave structure, how would we describe it? Again, we label from the smaller time frame to the larger time frame. Let's take a look at this point in time, for instance. Well, we're looking at it as of this point in time as if this is a C of B of 4, because we're beginning from the higher time frame wave 3, and then we've got an A and then an A, B, C of B. So it's a C, a B of 4. And one more simple example as of this point in time is we start with the smaller degree and we work up to the larger degree. So this point is a wave 5 of C, and this is a larger degree C because we can see it's a capital and a blue letter of 4. So it's a 5 of C of 4. So whenever we're writing about any point within a wave structure, we can write about it, we can label it like this, we don't have to get complicated, and we can immediately go to that point on a chart. Okay, well, let's get started and learn about subdivisions of trends and counter trends. We're going to begin learning about the subdivisions of a 5-wave impulse trend. Let's break down the subdivisions of a 5-wave impulse trend. Waves 1, 3, and 5 move in the direction of the higher time frame trend, and each of those sections, waves 1, 3, and 5, should subdivide into 5 waves. Waves 2 and 4 of a 5-wave trend are corrections within the 5-wave trend, and each should subdivide into 3-wave ABCs or some sort of more complex correction. ABCs are the most common corrections, but it can be any type of correction, any type of complex correction, etc. The wave 2 and the wave 4. So let's dissect some data here and see what the probable wave count is and what the probable outcome is given the potential wave count that we've identified on the chart. This is the euro-dollar daily data, and it's several months of data from around March 2020, and as of at least the last bar on the chart, it's early September of 2020. So we got about 6 months worth of data here. Let's just see if we can label this up through the point of time of the end of the data, and then if so, and if we have a confidence in that data, if it meets all the rules and guidelines, etc., of an Elliott wave count, it should give us an idea of how this market is going to continue, whether it's going to continue an impulse bullish trend or it's going to have a higher time frame correction. I'm going to begin with, from this low, we had a straight up for several days, section up, and then we always have some kind of correction going on here. So let's just start with a probable 1, Then this looks like an ABC, so wave 2 should be some sort of corrective pattern of 3 sections or more, complex correction overlapping. But we've got, looks like a pretty good ABC, and then this section up made a slight new high. It's probably beginning another section, a higher time frame section from this low. So let's just put this in, going A, B, C. And if that's the case, and we've completed a wave 2, that would be a 2. Now starting up from this low, again, let's look at the obvious. 1 up, slight new high, a decline, and then kind of a flat decline going on in here. I'm not gonna go into intraday data to try and dissect this move, but a correction should be 3 sections, probably an ABC. So we probably have what we'd call a 1 of 3, because a wave 3 should subdivide into 5 sections, and then potential of a ABC for a wave 2, kind of a flat correction there. And then we have another strong advance. If this is a 1 and a 2 of 3, what should this be? The next, it looks like a 5 waves up. 1, 2, 3, 4, 5. Well, it should, if this is a 1 and this is a 2, it's probably a 3. Isn't that right? Should be. Should be a 3. And it looks like this wave 3, how do wave 3s usually subdivide? Well, looked like it nicely subdivided into 5 waves also. And then what did we have? We had a correction, decline here, greater in time and price than any correction within this last swing up, which looks like a wave 3 of 3. So this should be a probable wave 4, and it even looks like it subdivided nicely into an ABC. And let's just make it a 4. And it has the possibility of being that. Then we had another little pop up here, just a couple days, a little correction, sideways correction, and then this has all the characteristics of a wave 3, doesn't it? Yeah, accelerated in price, etc. So what should it be, though, if we're doing a smaller time frame count? If we look at this as a 1 and a 2, and we've already got 1, 2, 3, 4 done, well, this is probably 1 and 2 of 5. Now, we know a wave 3, most of the time, it's actually greater in time and price than the wave 1 or the wave 5, but the rule is it just can't be the shortest of 1, 3, and 5. So it's obviously much longer than 1, so this can be a wave 3, this can be a 4, potential 1, 2, 3, 4. And then what's going on here? We kept getting little swing highs to new highs. Well, that's that unusual wave 5 where it breaks down into 1, 2, 3, 4, 5 sections. We call that an ending diagonal of a wave 5, and it should only be in a wave 5 position. So I didn't have a different font that I wanted to use here, so I just used the same font. The point is, it's broken down nicely into 1, 2, 3, 4, and then the wave 5 is broken down into an ending diagonal, so there should be wave 5, 5-wave advance from that low. But wait a second, should that complete the bull trend? Well, no, if this is a 1 and a 2, and then this is a 1, 2, 3, 4, 5, it should be a 3. So if this is the case, and this is a wave 3, what should we anticipate in the weeks or maybe even months ahead? We should anticipate a wave 4 correction followed by a wave 5 to a new high. It's that simple. If this is correct. Now, we may be incorrect on this. We may be. It all makes sense, and it would be what we would call the preferred wave count. If that's the case, then more than likely we're going to have a correction maybe comparable to this wave 2. It would be of this degree, the wave 4 comparable to this wave 2, and then we would have another advance to a new high. So at this point in time, let's just add some data on. and see if the market meets our expectations and follows through with a wave count that would indeed indicate this is a wave 3 high, and it's making a wave 4. Wave 4 should be some sort of corrective structure. And it should be something related to this degree, so probably equal to or greater in time and price. So we'll get a lot more into time and price of different sections, but just logically, if it's of a similar degree to this, then, it'll probably be greater in time and price than anything within the wave 3. So as of this point in time, what do we have? Well, we've got 3 distinct sections down. And I'm going to label that, it's a probable wave A, probable wave B, probable wave C. Okay, I should have question marks on all those, but I'm not going to put question marks on them right now. So should this be a completed wave 4 if indeed we confirm that this completes an ABC correction? Well, it's a possibility, but without going into too much detail and time and price targets, it looks kind of comparable to this. But if it's a wave 4, usually that goes longer in time and greater in price than the wave 2. So it's a possibility, but we're going to add some more data and see if it confirms that that indeed is the case. So we've come well up. I'm not going to draw lines here. We're well up into the range of the wave A. This is in a position to have completed an ABC correction. Let's continue to add some data. There we have an advance. It's only a 4 or 5 day correction, but it's greater in time and price than anything in this first section up. So this should be a 1 or A and a 2 or B. Let's just label those. As you see, every time we get new sections, we can look at them and how might they fit in. Okay, section up, correction, another section up. It's 3 distinct sections up, so that's potentially a wave B. Let's just take a look at this. See, this is giving us great information here. So this should be a higher time frame, an A and a B, because an A can be 3 or 5 waves, correct? A B needs to be some sort of correction. 3 waves, A, B, C, are a more complex correction. This is almost an ideal ABC. So we should have at least one more section down to test or exceed this wave A low. And then we would continue in the bull trend for this higher time frame wave 4. So let's just add some data. Number 1, this looks like an impulse decline. We could go to the intraday data, but I can just look at this and it looks like 1, 2, 3, 4, 5. And that's what a C should do, isn't it? The C should be 5 waves. So more than likely, we've completed an A, B, C correction, which should be a wave 4. And what follows a wave 4? Well, a wave 5 to a new high. So as of this point in time, we were able to identify the probable trend of the market based on the ongoing pattern of the market and knowing that a higher time frame 5-wave impulse trend, the waves 1, 3, and 5, should break down into 5-wave impulses. Typically, unless they're ending diagonals, unless they're ending the final wave 5 section of the higher time frame. And we're able to use our knowledge of trends and patterns as the market unfolded to identify this was an ABC. It was a correction. Potential, it was in a position to be an ABC once we closed into the closing range up here. It should not be a bear trend. Potential for ABC correction. What does that mean? Well, it's confirming that the higher time frame trend is indeed bullish, and we should have another section to new highs eventually. Hasn't confirmed that this is a completed corrective decline. In fact, because it was pretty short in time and price for the a degree similar to the wave 2, it may not be complete. We saw this as an ABC correction. It got confirmed as an ABC. So then we go back and say this should be a A, there should be a B. When the next wave C is complete, and that wave C should be 5 sections or break down into impulsive 5 waves, when it's complete, we should have another very substantial advance to a new high. Well, what should we anticipate following this probable wave 4 low? We should anticipate a wave 5, which itself should break down into 5 waves. It should have subdivisions, a 5-wave advance. So I'm going to add some more data onto this chart. And by the way, I realize this is a really idealized and almost a perfect textbook example of how the sections break down and what to anticipate in the degree of trend that we're in. And the markets, by the way, don't always break down so ideally, but they'll usually give us a pretty good indication of where it's at within a trend and what to anticipate once we've identified a particular point in time that meets all the rules and guidelines for an Elliott wave impulse trend, as this has. And this is a market we follow, for instance, in our DT reports, and pretty much this is how we identified this market as it was unfolding. I'm going to add some more data on here. And what we should anticipate, of course, is a continued advance to a new high, and it should break down into 5-wave impulse trend. Certainly an impulse trend, if we can't identify every little swing high and low, it should still be an impulse trend. And again, we'll learn more about time and price targets. But given this was itself, the wave 1 was a fairly substantial advance. And of course, the wave 3 was terrific advance. We should anticipate we'll probably have a pretty substantial advance for the wave 5 as well. So first, I'm going to go ahead and label the 2, the 3, and the probable wave 4. Let me take a look at where we're at as of the last bar in the chart. So we had an advance, a correction, then we just continued with higher highs and higher lows, just as we'd anticipate it should continue. Let's put some labels on this and see what makes sense. Well, a probable 1 and a 2, that's pretty simple. And then look at this. Again, 1, 2, 3, 4, 5. It looks like to me, how should a wave 3 break down? Well, ideally, it breaks down into 5 sections and a 5-section impulse. So that's in a position, at least, to be a 1, 2, and a 3, where wave 3 broke down into 5 waves. If that's the case, where are we at now? We made a new high. Well, we got to add one more on here then. That's probably a 4 in here. We've made a new high. Boy, this is fantastic. We're like 3 degrees up here, 3 time frames, because this is a higher time frame, wave 4. Now we're breaking down 5 into 1, 2, and then the 3 broke down nicely into 5, a 3, 4. When this section up is complete, we should have completed, or I should say we've probably completed, a higher time frame trend going all the way back to this March low. So we're down to, this is fantastic. When we take out the wave 4 of 5, that's a strong pattern reversal signal that we've completed the higher time frame trend. We've completed this section up, and when this section is complete, we've completed the entire trend going back to March. So I'll just add a few more bars of data. Let's see what transpired here in the days ahead. Well, as of this bar, we've exceeded this swing low. So more than likely, this is the 5 of 5. And it's completed the trend up from the March low. If that's the case, what would we then anticipate? Well, we'd anticipate a correction greater than time and price than any correction since the March low. In other words, greater than the wave 2, greater than the wave 4. The wave 4 was not significant decline in price, but it was significant in time, and we'd anticipate something greater in time and price than either the wave 2 or the wave 4. Fantastic example of a 5-wave impulse trend and how it breaks down. We've gone into it in a lot of detail. And once again, obviously every trend doesn't break down perfectly like this one has, but many of them do. And what I'm trying to teach you is most important is how to think about the position with the help of the subdivisions of different sections within the trend. Let's talk about and demonstrate a bit about 5-wave impulse trends and the higher time frame trend. But most importantly is that a 5-wave impulse trend should always be in the direction of the higher time frame. And a 5-wave impulse trend should never complete a correction. Let's take a look at some data and see how this is relevant. I'm showing crude daily data here. It's fairly recent data from the time I'm recording this. And I'm just showing it back for a few months. We can see from last few months up until this March high, it was just a consistent bull market, higher highs, higher lows, etc. And then we have this data over about a 3-week time span. What happened here? What's going on here? Let's focus down to this. So we know that we had a long-term consistent bull trend for several months coming up to this point. And then we had a decline. And number one, it did take out a recent swing low. So that itself is reason enough to take a close look at it and see what it means. So let's look at this data over this period of time. And what does that look like? Well, we don't have to go into a lot of details in that this is just pretty clearly a 5-wave decline. Meets all the rules and guidelines of Elliott's 5-wave decline. The wave 2 does not exceed the beginning of the wave 1. The wave 4 does not close into the range of the wave 1. And wave 3, we don't need to measure, but we can see that it's not the shortest of 1, 3, or 5. So an ideal 5-wave decline coming off of that long bull trend. Could this be a correction against that bull trend? Well, it shouldn't be, because a 5-wave impulse trend should always be in the direction of the higher time frame. And a 5-wave impulse trend should not complete a correction. So this should not be a complete correction. We should eventually continue to a new low. The higher time frame trend should be bearish. So what is this? Well, it's one section down, so it's going to be one of two things. It's going to be a 1 or an A of a higher time frame. So we can label that a 1 or an A. So what does that mean? What that means is that if this is a 1 or an A, that it should be followed by a correction, a wave 2 or a B correction. So this can be a 1 or A down. We should make a 2 or B correction that would be complete below the March low. When it's complete, the bear trend should then continue in at least one more section, and otherwise a 2 or B correction, and then a new extreme in a 3 or a C. So here's another example. And once again, I want you to learn how to think and not get paralysis of analysis and think that you have to number or label every little squiggle in the market, every little swing high and low. It's better to step back and try to get an understanding of the big picture. Let's look at this data. This is the ES, Futures Continuous Data, and it's 240-minute data. So it's intraday data. So it's a bar every 4 hours, and of course the ES trades 24 hours, so we got 6 bars for each day. And a lot of times if things aren't real clear in the daily data, of course we go down maybe one step down to a shorter time frame that might give us a better idea of how a trend or a section is breaking down. So from this February high we had a 77 bar decline, and this looks like some kind of a correction because it's definitely not a 5-wave impulse trend by any means. We don't need to worry about that for now. Let's look at this advance from this March 4th low into the March 18th high. What is this? Well, we made a new high, for one, just a slight new high before we had a fairly substantial decline. And of course, we're going to try and figure out exactly where we're at with this as of the last bar in the chart. But can you break this down nicely into nice subdivisions? Not really. You'd be forcing a wave count. The only thing we need to know in here is that this was definitely an impulse trend, that it was making higher highs and higher lows until we got into this March 18th high. That was the first time we actually took out a swing low, indicating that this pattern structure was probably over. And it ends up that was the case. We had a decline much greater in time and price than any of the minor corrections during this advance. So let's just think logically without looking at the data before the period on this chart. Look at it and say, should this be a wave 5 and complete a much higher time frame advance? Maybe could this be a 3 and a 4 and then this be a 5? Well, we'll get a lot more into time and price and targets, that sort of thing, in later chapters of this course. But let's just look at it logically, that it barely made a new high above this February high. And it was much shorter in time than even this correction, which was 77 bars. This was just 59 bars up, slight new high. More than likely, that's not going to finish off a higher time frame trend. More than likely, it's not going to be a wave 5 of a trend. And if it's not, what's the alternative? Really, the only logical alternative. Well, that logical alternative is off of this low, this corrective low, making a new high. This is probably a wave 1 of what's going to be a 5-wave impulse trend to a new high. So let's reduce the data a little bit there. Now, it's a wave 1 of what degree? Well, we can't make that judgment without having data going back, many months, many months anyway, on of what degree it is. But the point is, it's probably a 1. And again, I just said probably always deserves a question mark, because you can always be incorrect. The market isn't following our textbook Elliott wave patterns all the time. So here we go. We've got this advance up, potentially a wave 1. I would even go into probably a wave 1, but let's let the market tell us exactly what's going on. As of this point in time, we've had a decline. It's been 3 distinct sections. What would indicate this is a correction and not an impulse trend? Well, again, and if we had daily data, it would be closing into the closing range of this initial decline, which we look at as a 1 or A. This is intraday data, so if we just trade into this as an overlap, more than likely we're making a corrective decline, and we would be in a position to complete an ABC if we trade back into this range. And of course, it would take a trade above this high to confirm that it was an ABC. So we can look at this as a 1 or A and a 2 or B. We can then draw our line real simple. See, notice how simple I make this. We've already exceeded this swing low, but look at that. That's 1 bar. I'm at this little news event there. Let's make the market really prove itself and trade above this area, this little swing low right in here. Okay, let's just add some data. Well, we traded well into whatever swing low we're using. We're well into the range of what I've got labeled a wave 1. More than likely, this is an A, a B, and a C. If this is a corrective decline, and if the market is in a position to have completed a wave C, let me just label that as a C. And I'll put a question mark, because again, it's not proven to be a wave C until we trade above the wave 2 or B high. But what does that mean? That means the next advance should be a wave 3. What's a typical relationship between a 3 and a 1? Wave 3s are typically much longer in time and greater in price than a wave 1. So we may be in the beginning stages of the next trend up, which would be a wave 3. And it can't be it shouldn't be a C at least, because we're going to be making a new high. But we got to assume it's going to be a wave 3 if we do continue up. And it should be greater in time and price than this wave 1. So this is just the real early stages of a multi-day bull trend that's going to be fairly substantial. Let's add some data onto here. Well, as of this bar, we've exceeded this wave 2 high. We've confirmed that this is an ABC correction. And I should say, once again, it's in a position to have completed an ABC correction. As we know, markets can have some really crazy complex corrections, but they're very rare once we've taken out a wave B high. So more than likely, what would this be then? Well, that should be a 1. It's proven out. This should be a 2, because impulse trends, and this is a trend to a new extreme, so it should be an impulse trend since we made a new high. This should be a 1, a 2, and then we should have a 3, 4, and a 5 that would continue on for quite some time. And again, this is just the initial stages of a wave 3, which is generally greater in time and price than the wave 1. So once again, is a 5-wave impulse trend should always be in the direction of the higher time frame. We didn't even break this down, but we recognize that this is probably an impulse trend, and it went to a new high. So it should be in the direction of the higher time frame, and it should never complete a correction. And plus, because we went to a new high, well, that's not really relevant here. And then we had a perfect ABC, and then we're continuing on, more than likely, to a new high. Let's just add some data here, see where we end up. There we go. We've already got a new high, up, and away. And what's valuable here is we recognized all the way back at this point, as of this bar, this point in time, that more than likely this was a 1. We were in a position to have completed a 2, and as of this bar, we had confirmed that we had completed not just a correction, but a wave 2 correction. Continued on to new highs. So we've seen, just with a couple examples on this instruction page, that 5-wave impulse trends should be in the direction of the higher time frame, and how we can use that information to develop some specific trade strategies based on the probable outcome once we recognize the trend position of the market, and that a 5-wave impulse trend should never complete a correction. Again, we can use that information for very practical trade strategies. In this module, you're going to learn how 3-wave ABC corrections subdivide. So remember that ABC corrections are 3 distinct sections. The most typical one is an ABC zigzag, but there can also be expanded ABCs, irregular ABCs. We'll take a look at a variety of them, but they should all subdivide in the same way, in that the wave A should subdivide into either 3 or 5 waves, but usually they subdivide into 5 waves. The wave B must subdivide in a corrective structure. Very typically, the wave B subdivides into 3 waves itself, but as long as it's some kind of corrective structure, a wave B can never be a 5-wave impulse trend. And a wave C should always subdivide into 5 waves. Wave C of an ABC correction should always be on 5-wave impulse trend. Okay, let's look at some examples. Well, the data I've got showing here is It's the British pound data, the pound versus the dollar, Forex data. Let's assume we've had a prolonged advance and that we have this decline, very significant decline. We're anticipating that the market's making a correction against a bull trend. So, and of the data that we're showing on the chart, is this in a position to complete a correction? Simple as that. A correction should be at least 3 distinct sections. So this decline is certainly one distinct section. So at best, it should be considered an A. And then we have a B and a C to come at a minimum. Also, this is impulsive. We don't need to look at intraday data to break this down on whether it's impulsive or whether it's corrective. It's very much impulsive. So this should be a wave A of some sort of correction. That is, if this initial decline is complete. So let's add some data onto the chart. As of that bar on the chart, we've closed well into the range of what I have labeled as an A. So let's say we're at the last bar of this chart, and we can see that we've come down and closed almost at a new closing low. But we'd have to look at this and say, okay, this is in the position to be a completed ABC. And if that's the case, it's in the position to be a completed wave B. So we've got the wave A, impulsive trend down. We've got a correction of an ABC. Now we've come to make a new low. If this is a wave C, how should it subdivide? Well, it should subdivide into 5 waves, or it should have all the characteristics of an impulse trend and not a correction. Well, let's add some more bars and see what we can see. So as of the last bar on the chart, we now have a well-defined A, little ABC for a B, and the wave C, again, should have the characteristics of an impulsive trend, are 5 waves. And usually we don't have to break it down into the intraday data to discern whether it's a 5 wave or some sort of correction. So let's just add some data. Now that we're at a new low, we're going to be looking for, if this market were to close into the closing range of the wave A, that would be the warning that the wave C is complete. And of course, it'd have to trade above the extreme of the wave B to confirm that. But let's add some more data. There we are. As of the last bar of the chart, we've closed well into the range of the wave A. And we've got a wave B, which is really pretty well-defined ABC. What's going on here? Is this impulsive or is it corrective? Well, we don't need to break it down into intraday data, and that it looks very impulsive to me. And we could even look at it something like this: 1, 2, 3, 4, and a 5. And if we had the intraday data, that's what it would look like. It doesn't have any characteristics of being corrective. So we can go into the assumption, well, not the assumption that an ABC is complete, but as we phrase it is that as of the low of this data on the chart, is that this market is in a position to have completed a wave C low. Now maybe we have other technical factors as well that indicate the market is making or has made an ABC correction, so we'd have a really early signal of this close in the closing range of wave A to develop a trade strategy to be on the long side. Now, we're not going to confirm an ABC correction is complete until we take out the extreme of the wave B high. And if once that's done, is more than likely the market's going to continue to a new high above the September high. But impulsive down, wave A should be 3 or 5. In this case, it was a 5 impulsive. A wave B should be 3-section correction or a more complex correction. That's exactly what it was. And a wave C should be always an impulsive 5-wave trend, and that's what it was so far. So let's add some data on here. As of the last bars in the chart, we've taken out the wave B high. We have probably completed an ABC correction where A, B, and C subdivided just as they should. This is daily data of IGN, which is the network sector. And as of the last day on the chart, what is this? Or what could it be? Well, we had a impulsive sector down. Do we need to subdivide it? We certainly can pretty easily. We can subdivide this, and we had a 5-wave section down. And then what's this? Is this a correction or an impulse? Well, it looks to me more like, and we'll call this, just a second, let me get the right one. There we go. An A, probable A, B, C. We call that a flat ABC. And then we've got 1, 2, 3, 4, 5 sections up for a wave C, at least a potential wave C, and a wave C of the higher time frame, wave B. So let me put some data in here, potential A, B, and then what's this decline? Well, it certainly looks more impulsive than corrective, doesn't it? There's no overlapping swings on the wave down. It's a little bit on the sloppy side. We might have a little bit of trouble giving it an idealized 5-wave wave count, but it certainly looks impulsive and not corrective. So we could say that as of the last bar in the chart, which is closed well into the range, well, it's closed into the range of what I have labeled a wave A, is this market is in the position to have completed an ABC correction. Now, without adding any other data, could it be something else? Well, it could be a lot of things, but it should be at least part of a correction, because we've got the overlap. We've got potential A, potential B, potential C. We can say the market's in the position to have completed an ABC correction, but of course it hasn't given us any confirming signal that it's complete, and that would take, at least at this point in time, a trade above the wave B high to confirm this is a 3-section ABC. Now I'm going to add a bunch of data on, and let's see, as we add the data, if it's going to tell us something else is happening or not. So far, it's not voiding that potential for being an ABC. We've got an impulsive trend up over this couple of weeks, and we can even label this. Let's put our subdivisions in, because that's what we're looking at. And then we've got, what's this decline? Clearly a 3-section decline. Well, we wouldn't know that until we traded into that range, so let's add some data before we make that judgment. Well, there we go. 3-section decline. So this could be the beginning of a new bull trend, and a 1 and a 2, and we could be working on a 3 here. So if we look at this data, is this an impulsive trend? It looked like it began that way, to subdivide it into 5 ways up. That could be a 1, had an ABC correction. And so if this is a correction, what follows a correction? Continuation of the trend to a new extreme, and an impulsive, should break down impulsively. But is this impulse? Do I need to label this? So the point is here, we have 1, 2, maybe that was a 3, voided it as a 3. Something else is going on here. More than likely, it's part of a correction. Then we had a nice, strong trend to a new high, and then we came back down and closed into the range for a clear overlap. So this is probably a correction. So as of this point in time, what do we have to do? We've got to go back and take a look at where we're at. We've got to erase a few labels that we've got. And then we're going to see how the subdivisions are going to help us decide what's probably going to happen. So an A, B, C, which is potentially then an A, B, C, D, E, potentially. Potentially a B. If that's the case, what should follow? Well, continue bear trend to a new low. And that's a pretty high probability outlook, given that while these first 3 sections were in the position to complete an ABC correction. The follow-through was not impulsive, clearly not impulsive. Something else was going on. We did have 5 distinct sections, each with a higher high and a higher low. So that puts it in the position for the second most frequent type of correction, an A, B, C, D, E. And meaning that we could come back to this and say, okay, that could be a wave A because it's 3 distinct sections, and that's okay for a wave A. This is in a position to have completed a wave B. And if that's the case, we should have an impulsive decline to a new low. So let me just add some data. Look at that decline, little ABC correction, impulsive decline to a new low. And again, we just continued impulsively down. Let me stretch this data out. What's happening here? If indeed this is an A, if indeed this is a B, this should be an impulsive section to complete a wave C. Well, indeed, that's what unfolded. This is an impulsive advance. We've closed well into the range of the wave A. More than likely, we've just completed a higher time frame, ABC. And more than likely, this market then, if this is the case, we're certainly in a position to have completed an ABC correction. And if this is the case, eventually this market should continue to a new high. So I've added a lot more data on the chart, and indeed, the market continued to a new high. So we didn't pick every top and bottom here, but we used the subdivisions of each section to identify what were the possibilities, and then we identified what the market should do to confirm or invalidate those possibilities. This is the ES 240-minute data. Let's take a look at this data since this February high. I've already put some labels on it. We had a decline, a distinct decline, and then a correction, an advance greater than any since this decline. So we can look at this as an A. This was potentially a B and a C, but that's not how it worked out. Then we had another advance and then a new low. So we can go backwards. Sometimes we can go backwards, and our objective then is to try and identify, well, when is this higher time frame structure going to be complete? What would be the conditions to complete it? So we could look at this as an A and then an irregular or contracting ABC to complete a B, because a B should be 3 sections, correct? And then we continued lower to a new low. So where are we at as of the last bars in the chart? How should a wave C subdivide? If this is an A and if this is a B, and we're making a wave C, how should it subdivide? Well, it should subdivide into 5 sections, or at least certainly have the appearance and the characteristics of an impulse trend. So not a bunch of overlapping waves. They should be impulsive, lower lows, lower highs, no overlaps. But as of the last bar in this chart, we can certainly look at this as a possible 1, 2, 3, 4, 5. So that would tell us that, yes, this last section is in the position to complete a wave C of an ABC correction. Now, we could go into all the subdivisions of these other sections, and the reason I'm using this example is these would be a little questionable on how they subdivided into their individual sections. But the one thing that should be clear is the wave C, if it's making an ABC, if we want to recognize it for being in the position of completing an ABC, the wave C should be impulsive. And so as of the last bar in this chart, we can easily take a look at this as a 1, 2, 3, 4, and coming down into a wave 5 high. What would indicate that this section was complete? What's typical of corrections? Well, overlap, certainly a closing overlap, and since this is intraday data, just simply an overlap into the last swing low. So let's add some more data on this chart. And notice my language as we add the data. As of the last bar in this chart, we've traded well into the range of this swing low, which is I've got labeled as a wave B of B low. And so that would put us in a position to have completed a 5-wave decline. We need to trade above this, what I got labeled a wave 4 swing high, to signal that that wave 5 decline is complete. Let's just add some more data. Well, there we go. As of the last bar in the chart, we're in a position to have completed an irregular ABC. And so each one of these sections is not ideally subdividing, but what was important is we recognized this was the potential, A, B, and C should subdivide into 5 waves, and this has subdivided nicely into 5 waves, traded above the wave 4 high. This market is in the position to have completed a corrective decline. What follows a correction? A continuation of the trend prior to the correction to a new extreme. So in this case, it would be the trend continuation to a new high above the February high. Let me just add a bunch of data on here. Well, there we go. Let me square this up a bit, get the back data on. And we have indeed exceeded that high. And we won't add more data. I can just tell you it went a whole lot higher than that as well. But this is how we have, it's a little bit sloppy coming down, but we have just, we're looking at the big picture. Section down, 2 sections or 3 sections, kind of a flat arc, and then another section to a new extreme, clearly defined 5 waves, take out the wave, what we got labeled a wave 4 high, that breaks the impulsive pattern, that puts the market in a position to complete an ABC, which could be followed by a advance to a new high. And following this ABC, we would, what is the characteristic of the structure or shape of the market should be? Well, it should be impulsive, higher highs, higher lows, etc. That's exactly what we had. One last example for this module, and boy, there's so many varieties of ABCs, but if you just really focus on how they should subdivide, and if there's 3 distinct sections, 90% of the time, maybe 95% of the time or more, identify just within ticks of when that ABC is completed. Let's take another look at one more example. This is silver. It's just 60-minute data. So you don't have to follow every day, every bar, be labeling every bar every day. Maybe you're out on vacation. You come back, you bring up your silver chart, you look at this data, and we could put on all the previous data, but let's just say we believe that this market is in a position to make a correction. And here's the last bar in the chart. We just got back on the weekend. We want to take a look at some charts, consider if there's a trade opportunity coming up in the days ahead. Well, I've already started to label this, and that this decline was just clearly 1, 2, 3, 4, 5. So that should not complete a correction. Could be a wave A, or it should be a wave A. Then we had this correction greater in time and price than any since the decline began. So potential ABC, not an ABC zigzag, but an ABC, 3 distinct sections. And then here we are. We've come down to a new low. We're probably making a wave C. Now, we don't know if this is the entire correction is going to end at an ABC or if it's going to continue to something more complex, but we want to identify when it's in a position to have completed an ABC. Then we can develop specific trade strategies based on the potential that it's completed an ABC correction. So I'm going to add some data on. Well, before I do that, what do we got? A decline and advance. Probable 1, 2, or potential 1, 2, I guess is the way to say it. There we go. And even this 2, 1, ABC. Really nice little correction. And then, of course, a significant decline to a new low. Well, as of the last bar in this chart, this is a possible 1, 2, 3, 4, 5, which would complete an ABC correction. Typically, I'd be putting in question marks around there, certainly around the 5, because I don't want to prejudice myself that it is correct. But if we take out the probable wave 4 high, let's just call it, this is where it started to hesitate and move sideways to up. We advance above the wave 4 high, and that would break the lower lows, lower highs pattern and give us an indication that we've completed an ABC correction. Let me add some more data. Well, we made a new low. What's going on here? Since this is a low, I just go backwards. That should be a 5, a 4 up here somewhere, a 5. We take out this whole congestion area that I'm calling a wave 4. I'll just keep it back where it was here, even though technically this would probably be the wave 4, A, B, C, before he made a new low. But again, if we make a new high, this has a potential for being in a position to complete an ABC correction. And there on the next bar, we took out this whole congestion area for a potential 1, 2, 3, 4, 5 wave C and to complete a wave C. We're now in a position to consider immediate go-long strategies. What's to follow the completion of an ABC correction? Well, continued trend to a new extreme. So our pattern analysis and the subdivisions, how they broke down, and we'll talk a lot more about pattern reversal signals soon in another module, but in this section, give us a great potential setup to develop specific trade strategies. Let me go ahead and add some data on here. Well, there we go. I want to add more data, but we've already taken out what I got labeled a wave B swing high. So this is just almost an ideal textbook. 5 sections down for an A, 3 for a B, 5 for a C, taking out the wave 4 swing high. It puts it in a position to have completed an ABC correction with the potential to continue the trend prior to the correction to a new extreme. And boy, didn't the subdivisions help us a lot in this situation. Well, we could continue with dozens or even hundreds of examples of these corrections and how they subdivide, as we could with any other type of pattern. But what's most important is that you learn how to think, how to identify probable patterns, probable subdivisions, how to identify what the market can do to confirm or invalidate that potential pattern that the subdivisions are indicating is being made, and follow bar by bar to see what is meaningful, what's not meaningful. This is gold daily data from the August 2020 high. Let's take a look at this data bar by bar to see how the market unfolds, how the subdivisions can help to alert us to the probable position of the market. So we've got from the August high to the August low, that's a fairly sharp decline. And we're going to say that's a 1 or A, a probable 1 or A anyway. So let's label that. And then we had this advance, looks pretty clearly like an ABC for a potential 2 or B. I'm going to put a question mark on it because we don't know if that's it yet. But it certainly looks like it's met all the rules and guidelines for an ABC correction. And then the market's come down kind of sharply, and it's declined to below the wave B low. So more than likely, this ABC correction is complete. I mean, we have to assume it is as of this point in time. So let's add some more data and see if it confirms that that's the case. Let's take a look at the data so far. So far, coming off of this high, we've got a pretty clearly defined A, B, C. Now, maybe if we're looking at daily data, we would see a kind of 1, 2, 3, 4, 5. But we're going to just stick with this daily data and see what it tells us. Let's add a couple more bars. And again, we're continuing sideways to up for several bars. We're kind of all over the place. So let's take a look at what we got so far. And it looks pretty much like another A, B, C. So if this is an ABC, and if this is an ABC, well, this can't be a 2 or B. Let's just put it that way. It's something else is going on. So are we making a complex correction? More than likely. If this is an ABC, then we should have another advance. And typically, we first assume corrections are going to be 5 sections like an A, B, C, D, E. It may not end up being that way, but if we have lower highs on each section and higher lows, that's a contracting triangle. So that's an obvious part of a correction. And it can go into many other forms. But for now, let's just keep looking at this data, how it unfolds. And we should be putting question marks every time we put a section high or low on. But I'll go ahead and continue and see where we're at. Boy, oh boy. Look, it looks like we're just doing ABCs after ABCs. Every one of these sections looks like an ABC. And so far we've got a 1, 2, 3, 4, 5. So when we're labeling it as corrections, we usually look as an A, B, C, D, and then a potential E. We should also have a question mark there because we don't know yet. But let's add some data on here. Well, this is for the first time, as of this bar, we've taken out a swing low both intraday and on a closing swing low. So this is in a position to have completed an A, B, C, D, E. It also shows us typically in a B, C, D, E kind of correction, and even with most complex corrections, is the sections that are against the trend. Now, what's the trend here? Well, this trend is a correction. So the trend essentially is net sideways to bullish. So in the direction of the trend are usually either ABCs or 5s. Can be one or the other. But they should always have those corrections against the trend. In this case, it's a correction against the higher time frame correction, which is sideways to up. In this case, the B's and the D's should always be 3 sections or some sort of complex correction. They shouldn't be completed 5 waves. Let's put it that way, 5-wave impulse trends. So we were alerted pretty early on that we're going to make something other than a simple ABC correction because we had an ABC up and an ABC down. So that should either be an A, a B, and a C. And C's should always be 5 sections of an ABC zigzag, and we found this was just an ABC. So then we had another ABC decline, so it indicates that we wanted to be on alert, particularly because each swing high was lower than the previous one, the swing low was higher than the previous one, that this is a 5-section A, B, C, D, E contraction. That's what it ended up being. So this is a really idealized example of a 5-wave A, B, C, D, E contracting triangle. Let's look at one that's not an ideal example. Well, this is IYR, a real estate sector ETF. Again, it's daily data. Let's take a look at where we're at as of the last bar in the chart. From this November high, we had an ABC correction. Was it a completed ABC? Well, it might have been. At the time, we would be looking at it as a potential at least. So then let's add some more data. Got several more days data here. Looks like it made a little ABC up, correction up. So what does that mean if this is a completed ABC? Well, it means this may be a higher time frame A, may be a higher time frame B. Kind of as I've got labeled here with the other with the bolded A's and B's. So I'm going to add some data on and see what the market tells us as we continue. Well, here we've made a new low. So again, probable A, probable B. So are we making a wave C? Well, it's a possibility. We're in a position to do that. Let's just keep adding some data. Well, here we are. We had kind of a straight decline. If we broke this down to intraday data, it might look like a impulsive decline, which I'm going to take a few bars off, which is typical of a wave C. So I'm going to put that on. It would be a question mark, but as the last bar in this chart, we could say that this is very typically an ABC. So the wave A, of course, as we know, can break down into 3 or 5 sections. The B should always be some sort of correction. So in this case, it looks like pretty clearly there's an ABC up. And then this looks like it could have been a wave C, or could be a wave C. It looks like an impulsive trend down, not an ABC sort of trend. So it's in a position, notice my language, to complete an ABC correction. Let's add some data onto the chart. And I didn't want to add that on. We'll close that. Okay, let's add some data on. Well, we just had 2 days up, came down and made a new low. So since this was a new low below that, what does this look like now? And by the way, as we're doing this, you may think, oh, well, this is all academic after the fact. When we get to trade strategies and pattern reversal signals, that sort of thing, you'll see how we have a practical application of everything we're talking about. But right now, we're really looking to learn how to identify the patterns within the markets, the subdivisions, and how they relate to the higher time frame. So we'll add some more data on here. And I'm going to look at this as, well, it's a pretty good setup for ABC. So what have we completed here if that's the case? Well, probably an A, a B, and a C. Should a C wave of an ABC correction subdivide into 3 sections? Well, it shouldn't. If the C wave of an ABC correction is the final section of that correction, and typically on an ABC correction, at least a 3-section correction, whether it's ABC zigzag or ABC irregular, whatever, that C wave should be subdivided into an impulsive 5 waves. So this is giving us a piece of information that's saying, more than likely, this is not a completed ABC correction, and it's either going to be an ABCDE or some sort of complex correction, but it's not finished yet. So let's add some more data on. Where are we at as of the last bar in the chart? Well, it looks like another ABC. It's whatever it is, it's certainly not an impulse trend, is it? It's a correction of some sort. And again, I don't want to get into the intraday data here because this is giving us all the information that we need. So far we've got 3, 3, 3, 3. A, B, C, D, potentially A, B, C, D. And what does that mean? We would have one more decline for an ABCDE, and when that section is complete, it is in a position to have completed an ABCDE. Let's add some data. Made a new low, new low. What do we have here? As of the last bar in the chart, another ABC higher time frame wave E. So we're in a position to have completed an ABCDE, which one of the acceptable ways it subdivides is that each section is in 3 waves. And at the least, the corrective sections, which in this case are the B or the D, should either be 3 waves or they should be some sort of other complex correction, but they should obviously be corrections because they're corrections against the higher time frame trend, which in this case is a higher time frame correction. Let's add some data on here. As of the last bar of the chart, for the first time since this correction began, we exceeded the prior swing. So in each case here is lower low, lower high, lower low, lower high, lower low. First time we advanced and exceeded the last swing high. And without breaking this down, it certainly looks impulsive. Doesn't look like an ABC, does it? Well, there's some more data, and we kept going higher and higher. So again, we can look at a market as it's unfolding, and it will oftentimes give us very strong and reliable clues as to, is that pattern finished? Is that structure complete? And if it's not, what are the subdivisions of that structure telling us? Is it telling us that we should have at least one more section to go? And if we have one more section complete, such as down here, is it telling us that it's in a position to have completed a higher time frame correction in this case? Yes, it was. Well, this is crude oil futures, 240-minute data. And I'm going to look at this example because I've looked at it before in a prior lesson, but now it's a few days later. We've added some more data on it, and it's in a very interesting juncture where we can use the information we're learning from this lesson to help identify the immediate position of this market. So here's crude oil off of this March 15th high, almost ideal, impulsive, 5 waves down. Have we begun a new bear trend, or have we bear impulsive trend, or have we begun a correction? Well, we don't have to make that decision. We do know it's 5 waves down. That should be a 1 or an A. We had an A, B, C correction, a real obvious one, and then the market came down, but the thing was it had another A, B, C decline, indicating this did not complete wave 2 or B, A, B, C correction, that this was a correction itself, and so we should have at least a wave 5 up. So indeed, here's the next several days in the 240-minute data, almost a textbook, 5-wave advance. Did that complete a wave C for an A, B, C correction? Well, what we could have said at the time, once we took out this swing low, is indeed the market was in a position to have completed an A, B, C correction. But what gave us the first hint that that probably wasn't the case? And by the way, the corrections in the direction of the higher time frame trend are not the corrections, but the sections, and the direction of the higher time frame trend should be subdivide how? Well, either 3s for a wave A or 5s for a wave C, and if it's going to continue to a more complex correction, even the C could be a wave 5. So let's see exactly what oil was telling us as we added some bars on. Well, we had the decline off of this top, which was in a position to be a wave C high. We had the decline, and then we continued higher, but this decline was 3 sections. So 3 sections are a correction within the higher time frame trend, and that would indicate that we would have another section up to a new high. Now, why would we think that this was an A, B, C and not a 1, 2, 3 in the beginning of a bull trend? 2 reasons. Number one, the initial section up subdivided into 3 sections. 3 sections are always part of a counter trend move. So more than likely, regardless of how this pans out, eventually it will be a correction to this initial decline. And boy, it's gone on a lot longer than is typical, but the pattern is really clearly telling us that's probably the case. So more than likely this is an A, a B, a C, and because this was an A, B, C down, it should be more than likely a D. Now realize it could end up subdividing something more complex than an A, B, C, D, E, but that's the first thing we assume is being made. Let me add some more data on. And we made a new high as anticipated. As of this bar in the chart, have we completed an A, B, C, D, E? Well, it's a possibility, but this last section would typically be a 5-wave. And we certainly have a 1 and a 2, and then this is considerably longer in time and price than what I got labeled as a 1. More than likely, that's a 3. subdividing 3, we should have a 4, and then a 5 to a new high. Oh boy, this is just unfolding. Textbook. There we go. 3, 4, and 5 to a new high. Let me close this a bit. So we're still below the high where this initial impulsive wave 1 array down came. We are now, as of the last bar in this chart, let me add a couple bars. There are no more bars. This is as of the day I'm recording this. So we are in a position to complete an A, B, C, D, E 5-section counter trend, and we're in that ideal subdivision of where wave C is in a position to be complete and have completed a 5-wave advance. Where are we at? If we complete this as a wave E, in other words, if we decline below the wave 4 of E low without having taken out this high, we will be in a position to have completed this longer-term correction. And that's significant because then following the completion of this wave 2 or B, we should decline to a new low. Now, that may not happen. Maybe this market's going to continue to advance to new highs, but we've got several really important pattern position signals that are indicating this is a correction. And as of the last bar in this chart, we're in the position to complete the higher time frame correction. And the first signal was this was an ABC advance. This section was complete on an ABC, and there's no other way to look at this. So that indicates if it didn't complete an ABC, that whatever happens afterwards would be part of a correction. So that would probably be a wave A, then probably an ABC for a wave B correction, exactly what happened. Wave C's, typically, if it's going to complete an ABC correction at least, they should be 5 sections, exactly what it was going into this high. But then we had an ABC correction down and not an impulsive trend. It indicated that no, this did not complete the correction. We probably had one more trend, but it should still be part of a correction because we've come down and traded well into the range of the wave A. And if we had daily data, it would show we closed into the closing range of the wave A for a closing overlap, typical of a correction. So as of the last bar in this chart, more than likely, we're right near the extreme of what this corrective rally should be. And all along the way, the market kept revealing its probable position and probable outcome to the immediate position. Right now, what it's indicating is we're near the extreme to complete higher time frame wave 2 or B correction if we trade below that little swing low. Let's take a look at some data and see how we would try to understand the position of a market, whether it's in a correction or a trend, and how the subdivisions of each of those major sections might help us to understand the current position of the market and what the probable outcome is going to be. So I'm going to look at this set of data from this high. Into this point in time where this extreme high is on this data, and this is weekly data, by the way, and it's gold data, is there had been a bull trend for a few years. So this is a major correction within that bull trend. It would really behoove us if we could understand both where we are in this correction and the conditions that would signal that the correction is complete. Because if this is a major multi-month correction to a major multi-year bull trend, what's going to happen when the correction's over? Well, more than likely, the bull trend is going to continue to a new extreme. So that's pretty significant. Okay, let's take a look and see what we've got here. Let me focus in just on this data from the top. We'll take a look at it from the weekly data, and then we'll break it down. But there's a lot of lessons to be learned here. Coming off of the top, was this decline impulsive or was it corrective? Let me focus down a little bit here. And I realize this is after the fact analysis, so but looking at a lot of after the fact situations can help you to learn how different structures develop and how they subdivide and how they warn you when a higher time frame major trend change may be near. So if we look at this coming off this top, we have a decline sideways for many weeks, another slight decline to a new low, and then we come right back up and trade into this range. So this is all obviously part of a correction, and we really knew that. I'll reduce this a little bit. We knew that very quickly after it made the new low because it came back up and traded within the range of this initial decline. So let me add some more data on this chart. Here we go. I got to square the chart up a little bit so we can see what's going on. Again, we came down, correction, new low, another correction, traded well into that range, a new low, came back up and traded into this range. So this is just a major correction going on, and it indicated it was a correction many times as the market was unfolding. Let me expand this a little bit. And then again, we came down to make a new low. So what's going on here? It's certainly not a typical ABC. It's not a typical ABCDE. It's some sort of complex correction. And in a lot of complex corrections, we look at them as series of ABCs. Are there some connecting section to one type of correction to another type? Well, I'm gonna try and keep it pretty simple here, and I'll start to do some labels here at potentially what's going on. And again, I realize this is after the fact, but there's still lessons to be learned. All of these, boy, just subdivided beautifully. So first we have an ABC down, ABC sideways, another ABC down. So what's this advance? This is a significant advance, greater in time and price than really any of these, and it came up and almost tested this high. Well, I look at this as, this is a dividing factor, dividing whatever is going on here with what's going on afterwards. So frequently in Elliott wave, it's considered an X. And in academic Elliott wave, there's a lot of rules and guidelines for X's. You really don't need to get concerned with that. What you need to do is identify that there's a section that just divided one series of, in this case, ABCs, obviously part of a correction. It divided that, and now we've got another series of potentially similar degree of all of these that's going to last a considerable amount of time. Maybe this is an A, B, C, X, and then what do we say complex corrections frequently are? A series of ABCs divided by potentially by an X. Let's call it the X wave. What do we got so far as of the last bar in this chart? Well, potentially an A, B, C. This could be a little A, B, and we're working on a C. And this is making an A, B, C. When it's finished, we should continue to a new low and another ABC structure before this whole complex correction is complete. Just a moment, that isn't finished yet, is it? It isn't complete yet. What would confirm, what have you learned that would confirm that this is complete? Well, if this is a wave A high, closing into the closing range of the wave A would indicate that this is complete. It's a completed ABC, and the trend should continue lower. So I usually do something along those lines. Now I wanted to show you this example. Yeah, we got all the data that's up to date, at least so far. I wanted to show you this example because it's a current example as of the time I'm recording this. And I can tell you that weeks ago, when we were running into this point in time, which would be back in December, we're looking at this as a probable ABC correction, which might have finished the correction. So the objective is always to identify a point in time of when the higher time frame correction can be complete. Because this advance was not an impulsive advance, I'll show you that in the daily in a minute, it indicated that the higher time frame correction was not complete. Well, it might have been a completed ABC, but it didn't complete the higher time frame correction coming down because we didn't have an impulse trend coming off of that low. Let me show you that. Let's go to the daily chart. So here's the daily chart for that section. Is this a 5-wave impulse? Well, it's not. Section up, correction, short section up, short correction, new high. So this can't be a 1, 2, 3, 4, 5 because wave 3 is the shortest of the potential 1, 3, and 5. Something else was going on here. So this turned out to be a correction, and we had that indication of that early on, shortly after this top was made, that this couldn't be a 1, this couldn't be a 3. This couldn't be a 3 because it was shorter than the 1 or the 5. And then, of course, we came down, took out the swing low, indicated this entire correction was complete. So you see how we got to constantly monitor the market to see if it's confirming or invalidating the probable position. In this case, coming off this low, at least during this week, it gave us a clear signal that this was not an impulsive advance. If it's not an impulsive advance, and if it's a correction, it's part of an ongoing higher time frame correction that should eventually make a new low, which is exactly what happened. So here we are as of the last bar in this chart, a potential wave A, a potential ABC. If we should close below this overlap close, what I got labeled as a wave A closing high, what does that mean? So it means that we have completed this correction, but right now we've got some understanding of this entire decline. It's a complex correction. It's a series of ABCs that are tied together. Now, we don't know how this is going to turn out. For you studying the course at a later date, you can check it out to see how it turned out. So that's a valuable piece of information to have around this point in time, is to understand where we are within the market structure, just as it was a valuable piece of information to have back at this point in time several months ago, that this advance was not the beginning of an impulsive advance. It was simply a correction within some sort of counter trend, and when it was complete, more than likely, this market was going to continue to a new low. Well, this is daily data of Google, fairly recent data. What's going on here? We had a sharp, impulsive trend up into the high bar in this chart, which was actually just a couple months ago. Bit of a decline, and then just this choppy mess going on for several weeks. So is this a correction within a bull trend or a correction within a new bear trend? And once we get an idea of the probabilities of which it is, how would we identify when this correction is over? Well, the initial decline looks like an ABC. So more than likely, this is a correction within an ongoing bull trend. Obviously, it was a strong bull trend going into this high. So that would be a wave A of a higher time period. This would be some sort of complex corrective wave B. And I'm not going to put labels on it because it's irrelevant. it's irrelevant to us, at least as of this point of time on the chart. What would be our objective? We'll just call this sometime around in here as a wave B. Well, we'd want to see when a wave C was complete. How should a wave C subdivide? Typically, it should subdivide into 5 waves. Well, it's going to be, well, it might be at least, hard to see subdivisions on this daily data that's chopping all over the place. So we might want to go down to, say, 240-minute data and see if we can identify the end of a wave C. So I'm going to go 240-minute data here. Oops, got to close that first. There we go. And this is that same period of time from this high. And we looked at that on the daily. This looked like an ABC. When we look at it on the intraday, well, it looks more like a 1, 2, 3, 4, 5. It's really not relevant at this point in time because the wave A can be a 5R3, but we'll just call it an A. Boy, we got series of ABCs here. This is 240-minute day. There's only a couple of bars each day. Let's take a look as of the last period and the last bars on this chart. Our objective would be to identify a 5-wave decline, because any 5-wave decline has the potential for being a wave C. Let's take a look here from this last swing high, where it came down to test or exceed the recent low. From this last swing high, we can count down. It looks like a possible 1, 2, 3, 4, and then to a new low to a 5. It's a possibility, at least. Fits in pretty well. So if we were interested in Google, and if we were interested to get a long position in Google, and that would mean we'd be interested in identifying the end of this correction. And as of the last bar in the chart, we're in a position to complete this correction. This is a possible A and a B, and then this decline, subdivide, kind of loosely, but pretty good shape, into a wave, or 5-wave, potential wave C. As usual, we got a question mark there. What would indicate that this section down is complete? Pretty simple stuff. We take out the prior swing high, which I've labeled a wave 4. We take that out. We're in a position to have completed this ABC complex correction. At least it's not a simple ABC, given the mess that this wave B is. But that would be in a position to have completed it and to develop a specific go-long strategy right above the swing high for the potential of the resumption of the bull trend to a new high. So let's add some bars onto this chart. There we took it out and just immediately gapping up on the opens here, because of course this is not 24-hour data. This is stock exchange data. So we gapped up very strongly, resumed the bull trend, obviously to new highs, and this is just the beginning of a new section of the bull trend. But what's important here is to recognize sometimes we don't want to try and force a wave count. We just want to get what's the basic sections here. So the basic section here was we had a trend down, we had a trend up. How does this subdivide? Who cares? All we know is potential A, potential B. When the B is complete, we would look to identify the end of the next section as a C, because when it's over doesn't necessarily mean the whole correction's over. But more than likely, we're in a position at least to have finished it. We can identify a specific trade strategy to take advantage of that information with a high probability outcome and minimal capital exposure. Sometimes if we're not sure of what the longer-term trend of the market may be, we have to just let the market unfold bar by bar and section by section and recognize when it's telling us that it's either a trend or a counter trend and where it is within that trend. So in this lesson, we're going to take a look at how waves 1 and A, 2 and B, and 3 and C can subdivide in the same way. and they frequently do. And sometimes we're not sure which it is, whether it's a 1 or A and a 2 or B or 3 or C. But we have to look at kind of the shape and the form and the subdivisions as it unfolds to give us a clue early on which it is. Let's take a look at silver. This is 240-minute data. This initial decline was just a perfect 5-wave decline. I've got it labeled as a 1 or an A, and then we have a definite correction here, a series of ABCs for a probable ABC 2 or B, because 2 or B's, again, they're both corrections, and so they both should, or they both can look the same and subdivide the same. Now, a wave A can subdivide into 3 sections, but in this example, we've got a 5-wave decline. It's probably more typical that wave A's are 5s, wave 1s should always be 5s, and then correction for a 2 or B. And we're assuming that we don't know the real position of the market from this high up here. We don't have a prejudice on whether it's beginning a bear trend, an impulsive bear trend, or whether it's making a correction. So we're going to let the market tell us what it's doing. So as of the last bar in the chart, we've continued lower to make a new low below the 1 or A low. So that confirms that this 2 or B should be complete, and we're making a wave 3 or a wave C. So first we look at this decline. Is that impulsive? Well, yeah, it's impulsive. It's lower lows, lower highs. Let's add some data. We continue lower and lower. And what would indicate this is not a wave 3? Well, if we traded back up into the range for an overlap of wave 1 or A, that would indicate more than likely this is not a wave 3. That's probably making a wave C. Let's add some data. So we traded, it looks like 1 tick. We're not going to worry about 1 tick. We're not going to make a decision on 1 tick. Well, there we traded fairly well up into it. Now we're consistently going up into that range. Well, more than likely, this is not a wave 3. Now, I realize, particularly in academic and Elliott wave, is that this can be a 1 and a 2, and then we're making a 1 and a 2 of 3. That is a possibility. But I feel so strongly on how valuable the overlap rule is. Typically, if it were an impulsive bear trend, we would not come back and trade into the range of 1 or A so soon. So whenever I see an overlap like this, I'm assuming that this is not a wave 3, that it's made a wave C. And now we've had a correction greater in time and price than anything since this decline began. So it's a possibility we've completed a wave C. Would it subdivide correctly into a wave C? Well, after the fact, we can certainly look at it as and here I'll divisions in, a 1 and a 2, 3. Again, this is after the fact where we look at this irregular wave 4. At the time it was being made, we'd probably look at 1, 2, 3, 4, 5, but then we just had straight up and down to a new low. So it's probably an irregular ABC wave 4. Then we just had a clean 1, 2, 3, 4, 5 into the extreme low. So that's a 5 of 5 into that low. Potential wave C. Not potential. I'm going to look at it as a probable wave C. So as of this point in time, the market's in a position to have completed an ABC correction. Does that mean it's complete? Not necessarily. So let me get the A, B, and C on here. So again, it's in a position to have completed an ABC. Doesn't mean an ABC is the complete correction, but any subsequent activity should be considered a correction, part of a correction, something other than an ABC. So let's add some data on here. As of this point in time, what's this look like? Impulsive or corrective? Boy, sure looks corrective to me. We have these overlapping swings. We make a new high. We come back down. We take out a swing low. There's no way to look at this as an impulsive trend. So we have to look at this as a potential. Maybe it's going to be an A, B, C, D, E correction, something along those lines. It's certainly, the one thing it can't be is a 1, 2, 3, 4. It can't be that. It can be an A, B, C, D. Again, we look at these subdivisions. We don't have to put labels on them. We look at it and say, this is a correction. It's that simple. Okay, let's add some more data and see where we end up. So far, does that decline look impulsive or corrective? Well, it's the very definition of impulsive. Lower lows, lower highs, no overlaps. We'll add some more data here. Yeah, I'd say that's impulsive. So what would indicate this potential A, B, C, D, E is complete? Well, once again, an overlap. If we were to get an overlap, looks like we have as of the last bar in the chart, it would be in a position to have completed an A, B, C, D, E. And looks like we have as of that last bar in the chart. So let me label this, and then let's discuss what should follow. So a real nicely formed A, B, C, D, E. We had strong signals that indeed this was some sort of a corrective decline. And when we traded above the swing low, more than likely at least this series of A, B, C, D, E was complete. And we're going to start another series of something. Could be an impulsive trend on the upside. It could be some more complex correction is going on here. The point is, this whole section should be complete, and we should have an advance, a net advance, greater in time and price than any of these sections within this decline should follow. And again, how did they subdivide? Initial 5-wave decline could have been a 1 or an A. An obvious correction into this high, 2 or a B, an impulsive decline just to a slight new low, and it was potentially working on a 3 or a C, but then it came up immediately without continuing much lower into the overlap, indicating this was a C. And while C's typically subdivide in 5 waves, just like 3s. You'll learn a whole lot more later on about time and price targets for Cs, but just think of something fairly logical. Markets are pretty logical. That if this decline is basically about the same in price anyway as this decline, more than likely it's not a 3. More than likely it's a C. Then we had an obvious corrective advance of some sort of another. To complete a correction. When the correction is complete, we should expect a new low, probable impulse type of subdivisions. Correction up, impulsive subdivisions down. Once we had the overlap, this whole A, B, C, D, E correction was probably complete, and we should anticipate an advance greater in time and price than either of these two. Is this a completed correction in the beginning of a bull trend to a new high? It could be, but not necessarily. We could continue on to an even more complex correction, but the point is we ought to be advancing for some time to come. So let's take a look at the follow-through to this potential A, B, C, D, E. I put these horizontal lines in. This is the closing low on this daily data of the wave A, and just to show how we came down another impulsive trend, and then we came and closed well into the range, the closing range of what was labeled a wave A. And then we came down and made a new low, and then we came back up and closed well into the closing range of what was labeled the wave C, indicating A, B, C, D, E is probably complete. And what would typically follow? Well, typically would follow an impulse trend. And what do we have here? Well, this is the daily data, and it's right up through the day that I'm recording this, by the way. So, boy, I hope a lot of these work out the way I'm suggesting they're going to work out. For those of you who see this course far into the future, you'll be able to check it out. But just in general, it looks like we've got 5 sections up. And if it's 5 sections up, and it looks like a pretty good impulsive trend, it should be in the last section up. Now look at this day. This is actually today that I'm recording this. Boy, a big up day to a new high. Most people get pretty excited, pretty bullish with this day. What do we know, however, when we're using just some basic Elliott wave patterns, is that it's in the 5th section up from this low. So we're in a position to complete a wave 5. And how would that wave 5 fit into the higher time frame? That's yet to be seen. But we should certainly be cautious that more than likely, in this case, this is silver daily, is reaching a top that might last at least for several days, if not a few weeks. This is the 240-minute data coming up from this low, which I labeled as a wave E. Let's see how this 5-wave advance has subdivided and giving us maybe a little confidence that indeed we're at or near the end of this immediate advance at least. Well, here's the wave 1 up. It was an obvious impulsive section up. Then we had an ABC correction, a correction greater in time and price than any on the way up to that point in time. We had another impulsive advance, higher highs and higher lows, subdivided nicely in a 1, 2, 3, 4, 5 into a potential wave 5 high. Then we had a correction. I've labeled it ABC. It's a pretty sloppy ABC. Maybe we could label it a more complex correction, but in general, a swing down, correction up, and a down to make a wave 4 low that did not trade into the range of the wave 1. So potential 1, 2, 3, 4, and then how about this advance over the last few days? Once again, it's impulsive. 1, 2, 3, 4, and this new high that was just made today is in a position to be a wave 5 of 5. So that's pretty exciting. That's how we can use Elliott wave and how waves subdivide to understand the probable position of the market. Now, I don't know what's going to happen. Nobody knows what's going to happen. Here's what I know. I know that coming off of this low of a few weeks ago, we've made 5 distinct sections into a new high, and we can subdivide those almost ideally, each one of those sections into what is typical according to the Elliott wave rules and guidelines. So I know, as of the last bar on this chart, that we are in a position to complete a wave 5 of 5 and complete the advance up from this low, over a month ago. That's pretty valuable information to have and to be able to adjust your stops and develop a specific trade strategy. So I hope you can see how valuable this can be to you. Well, let's take a look at a few more situations, a few more charts, and see how we can use the subdivisions of different sections to help us identify the position of the market, possibly when a trend or a counter trend is at or near the end, and how we might use this information also to develop specific trade strategies. So this is daily data of the IWM, that's the Russell ETF that follows the Russell Index, and it's widely traded. So let's just take a look at this. This is a fairly recent example from the time that I'm making this recording, at least. And I think it's a great example of where the pattern isn't perfect, but we should get a clear idea of what's going on if we have a little bit of knowledge of basic Elliott wave and types of patterns that trends and countertrends should make. As of the last bar in this chart, we had a pretty big down day. And let's look at from the high up here what's happened. And I've already got it labeled because we're going to look at how we use the subsequent data to make a decision. So we have a possible 1, 2, 3, 4, 5. And 5 waves down should be a wave 1 or a wave A. And typically, we already have an idea, at least more or less from other technical indicators, is the market making a correction or is it making an impulse? I usually still label it 1 or A, 2 or B, just so I don't prejudice my mind on what is happening. But more than likely, for instance, in this situation at least, there is a strong trend coming up into this high. Now, that doesn't mean that it's just going to make a correction and continue the bull trend, but we would probably have some idea if this is making a correction or an impulse, and we want the market structure and the market activity itself to confirm or invalidate that. So, okay, once again, 5 ways down should be a 1 or A, and I realize we had a overlap here intraday, but we didn't have a closing overlap on this 5-wave decline. And then we had kind of a sideways ABC, potentially at least, for a wave 2. Again, minimum 3 sections for the correction. Wasn't a simple zigzag, but it was a simple ABC. And then just straight down and into this last bar in the chart. So what's happening in here? Is this a 3 or is it a wave C of a correction? Well, the one thing we would do is we would certainly draw a line across the lowest close here, daily close, and if we closed up above that, there'd be a closing overlap. It would indicate this is a correction, and it was even in a position to be over at that time. The other thing we can do is we can look at the subdivisions of this decline on a smaller time frame data, such as some intraday data, 60-minute or so, if we're available during the day to take a look at that. And even if we're not available during the day, at the end of the day, if we have that intraday data available, we can take a look at each of these sections and see how they subdivided. And of course, our attention is on this last decline. So let's take a look at that as if we're able to follow this during the day. Well, this is the 60-minute data up through that last day we were showing on the daily data. Let's take a look at this 60-minute data coming down from what I had labeled as a wave 2 or B high. So we just look at this, we say, okay, that's impulsive, typical of a wave 3 or a wave C, which it should be impulsive. And what do we have so far? Well, we have a decline. Let me label these. Possible 1 and 2. And then a 1, 2, 3, 4, 5. Maybe this is a 3. And if that's correct, what should follow over the next day or so? Well, we should complete a wave 4 correction, go to a new low to complete a wave 5, and then have some kind of reversal set up. So let's just add some data. And let's say we were able to watch this during the day the next day. And we'll add one more day's worth of data on. And just in case we weren't able to watch it during the day, but we wanted to look at it at the end of the day. So I'll have the 60-minute data till we finish this day off. Well, boy, that's pretty nice. If we were watching this during the day, we could say we got a 1, 2. And then if this is 3, we had a nice sideways ABC. For a 4, good possibility we're in wave 5. So the other thing is just keeping it simple is that this is a well-defined correction that, and probably a wave 4, and if it's succeeded, we've probably finished this decline, this section down. So the other thing I would do is I'd just draw a line across this top, and I'd set it as an alert for if we took it out, well, we'd get a little alert from our software. There we go. We just exceeded it. We made the new low, then we came back and exceeded the high. We're in a position to have completed a 5-wave decline. Now, is that a wave 3 or a wave C? Let me just expand the data a little bit. Well, we need to make that close. Let's go back to the daily. We need to make that close above the closing low. So there's that next day. That's the data that we just completed. Haven't closed above it. So let's take a look at this a little logically also, in that, and we'll get a lot more into it when we look at some time and price relationships. But we had this 1RA down, 2RB correction, and then we had this 5-wave declines, clearly 5 waves on the 60-minute data, and sharp reversal back up. So this is fairly short. Just think logically for being a wave 3. Looks like it fits in nicely as an ABC. So it would take a daily close above this level to confirm that we've completed an ABC correction. But if we go back to the 60-minute data and we see that we've had a 5-wave decline, so that makes it, listen to my language by the way, it's in a position to have completed a wave 3 or C, and given that it's already come back up and traded into the range at least of where I got the last swing low, this is labeled a B because it's kind of an irregular ABC, is that it's more likely a C than it is a 3. So that's just kind of looking at this logically and using the smaller time frame data, if it tends to be clearly defined swings, to help us identify the higher time frame trend. Let me add some bars on this. So these would be the last couple bars of that day. Then pretty soon we're going to get into the next day's bars. There we go. Change colors, that means the next day. And indeed, we continued the advance after we had traded above this swing high the next day, well into the range of these last lows. So we need to wait till the end of this day to see where it closes. But if we were able to follow this during the day, if we recognize the subdivisions here, if we had some other technical signals that indicated we were making a reversal and a low, we'd have an early warning that we've probably completed, let's go back to the daily, a correction within a bull trend. And what follows a correction? Well, continuation of the trend prior to the correction to a new extreme. So the subdivisions helped give us some early warning that it was complete. This is Treasury notes, 10-year notes, daily data, going back over, 6 or 8 months or so of daily data. And this is kind of after the fact, needless to say, analysis, but there's a good lesson to be learned here. Look at this decline. It's kind of a sloppy wave count. It's lower lows, lower highs. There are a lot of overlaps as it was declining to new lows. But what is consistent about this is that just take a look at each one of these corrections, which we now know are corrections, in that they're obviously corrections. Whether we can identify a specific pattern or not, they're quite obviously corrections, at least after the fact, and we should have been able to identify these as corrections while they were going on. They're essentially just sideways, very choppy. Whether we could put some specific label on them or not, that's another question. But typically corrections are pretty much obvious corrections. And a lot of times we can break them down to help identify when they're complete, but not all the time. So what I thought I'd do, I'm just going to take a look in detail at just one correction, just this last one before notes and bonds just declined sharply for week after week. Let's just look at this section, and we'll go to the 240-minute data. So here's the 240-minute data during this advance, this corrective advance. How would this break down? Well, even after the fact, are difficult to put a really good wave count on it. But look at the advance during this part of the advance. Up, little ABC sideways. Did make a new high, another ABC and an overlap. Did make a new high, just a few days kind of sideways to down. And then we did have a nice 5-wave advance of this last section up. But this all looks like part of a correction. So let's just say we're at the time we're looking at this and it just keeps advancing. We keep changing our labeling. And we're losing track of or not confident about, how this is subdividing and identifying the end of this as a correction. What should follow a correction? What identifies from a pattern standpoint that a correction may be over? And that's a 5-wave impulsive trend against the correction. So in other words, if this is a corrective advance, if we make a clearly defined 5-wave trend in the opposite direction, an impulse trend in the opposite direction, we have a possibility that this higher time frame correction is complete and that the trend prior to the correction is going to continue to a new extreme. In this case, the bear trend is going to continue to a new extreme beyond where the correction began. So look at this data against 240-minute data. After this, this is January 7th high. Boy, that's a clearly defined 5-wave section over about 3 days' time following January 27th high. The first time since January 12th low that we made an impulsive decline. So that was a clear warning and a clear signal that this correction could be over and that bonds and notes could be on the verge of continuing the bear trend. Sometimes we can't really confidently label all the subdivisions and the exact way that a trend or a counter trend is breaking down, but we want to answer the big question first. Is it in a trend or a counter trend? And in this case, this advance, even though it was making higher highs, there's lots of overlaps. It wasn't a real impulsive advance, in that more than likely it's making a correction to the bear trend. And if that's the case, when it's complete, it should make a 5-wave decline. And a 5-wave decline would be the initial warning to us based on pattern that indeed the correction was complete and the bear trend is reasserting itself, and we can develop a specific trade strategy as of this point in time for the short side. I've come back to that IWM daily data, and this is the example we used a little bit earlier about identifying a probable ABC correction, which then should continue to a new extreme, which is exactly what happened. Then I've added some more data on. What do we have here? Certainly looks like an impulsive trend down, doesn't it? Should a correction be complete on an impulsive trend? So regardless of what our technical indicators are about the higher time frame trend, all that sort of thing, the pattern is indicating that this is making a wave 1 or a wave A. There should be a correction at some point, and then the trend should continue lower, probably beyond the extreme of the 1 or the A. In other words, what's important here is that this should not be the end of a correction. And we can kind of look at this, and it looks kind of like a 1, 2, 3, 4, and then a 5. That's a possibility. So why don't we just go to the daily data and confirm that this is breaking down in an impulsive trend, of which, according to our Elliott wave rules and guidelines, cannot complete a correction if that's the case, if it's an impulsive trend. There we go, 60-minute data. I've already showing this first section down, and it definitely has subdivided into 5 sections. Now, the 1, 2, and the 3 is pretty short. It's a bit longer than the 1, but it fits all the rules and guidelines of not being the shortest, and then we just have an extended wave 5. So I suppose we could break this down in different ways. Maybe this is the 1 and the 2, and then a 1, 2, 3, 4, 5, something like that. The point is, it's impulsive. We can show it as an impulsive trend down, and it should not be the end of a correction. That's what's important. So our objective at this point in time is to identify the end of what will be a wave 2 or B correction, because at some point in time when that's over, then the bear trend should continue to a new extreme, whether it's going to be a wave 3 or a wave C. So we would be looking at, and our subdivisions helped us to identify that this is an impulsive trend down. It's making a 2 or B at some point in time. When that is complete, we should have then a 3 or C decline. So we'd be looking at our subdivisions to help us identify the end of this correction. Well, let's just do a little bit of review. And I want you to be aware of Elliott wave paralysis of analysis with corrections or impulse trends or whatever. The main idea is identify if a market is probably in an impulse trend or is it probably in a correction. So it should have that general sort of form and structure of either an impulse or a correction. And if the wave structure is not easily identifiable, just remember that generally 5 wave sections are in the direction of the higher time frame trend, such as the waves A or C or waves 1, 3, and 5. And a correction should never be complete in 5 non-overlapping sections of an impulse trend. That's a really helpful rule or guideline to have. Just like in that last example of that decline in the IWM, is that it clearly should not be the complete correction. Could be a wave 1 or a wave A of a higher time frame wave structure of a correction. And 3 wave sections should be in the direction counter to the higher time frame trend, so such as a wave B or a wave 2 or wave 4. And the last section of a complex correction should always subdivide into 5 waves. And about the only exception to that is if we have something like a contracting triangle, where each section subdivides into 3 waves. But in most cases, the last section, the final section, will subdivide into 5 waves. And then if we get a 5-wave impulsive trend in the opposite direction, that indicates that the correction is complete, and it's the beginning of an impulse trend in the opposite direction. Earlier, you learned about 5-wave impulse trends. Those were 5 sections, had higher highs and higher lows, and non-overlapping. And those 5-wave trends would complete a section of a higher time frame trend. So let's take a look at this data, and we're going to look at an exception to a 5-wave non-overlapping impulse trend. So this is a daily data. This happens to be Bitcoin. And let's assume, from where my cursor is here, it's around the January 2021 low, that we're very confident that this completed a wave 4 correction and that we would have one more section up to complete a higher time frame 5-wave trend up into what would be a pretty major high, more than likely. And as of the last bar in this chart, it looks like it's subdivided very nicely into 5 waves. It looks like it'd be an almost perfect end of wave, not only end of wave 5, but even if we assume the 1, 2, 3, and 4 is correct as shown, the wave 5 would have subdivided into 5 waves itself. So we'd really want to be on alert to complete this end of wave 5 of 5, because it should also be the end of wave 5 of 5 of 5. Well, let's add some data and see how it progressed. There we have a really big reversal outside. We call that an outside bear reversal day, and then another down day. Looks like we're in position to have completed just a major multi-month trend up in a perfect 5-wave advance, assuming that, again, that January 27th low is a wave 4. So what should be our initial pattern reversal signal that the wave 5 is complete? Well, just a trade below the wave 4 of 5 of 5. That's the beauty of multiple time frame or looking at subdivisions, that if we're confident of how the subdivisions have unfolded, and if we're confident that that's a wave 4 of 5, then just a trade beyond that low would be the initial signal that a much higher time frame, multi-month top has been complete. And certainly a trade below the wave 4 of 5 low would indicate strongly that the wave 5 of 5 is complete, and we should have a correction for many months afterwards, many weeks or many months. And let's just add some more data and see how it unfolded. Well, as of the last bar of the chart, is we've gone up and made a new high. So what's happening here? Again, nothing has changed that this is probably a wave 4 low, and that we're looking to complete the wave 5 up, which will complete a much higher time frame trend. But we've come down, we've had a correction, and then we've gone up and made a new high. So obviously this can't be the wave 5, has to be something else. What is one possibility? The possibility is that this is just a wave 1 of 5. So let me put it in. And this is a wave 2 of 5. And then again, we're going to continue to unfold where wave 5 would be in an impulse trend of higher highs, higher lows, where wave 4 does not overlap with the wave 1. Add some more data on here as it progresses. Let me expand that a little bit. So we've made a new high, and then we've immediately come back and traded into this range. What's going on here? Can this be a 1 or 2? Are we making a 3? And I'm going to add some more data. I'm going to look at this, how we'd look at this as the market continued to advance. So if we're looking at a potential ending diagonal, that would mean the wave 4 can trade into the range of the wave 1. Again, we're assuming this is a higher time frame wave 4. So an ending diagonal indeed allows the wave 4 to trade in to the range of the wave 1. And the beauty of it is ending diagonal. Ending. It ends the trend. We also call it a fifth wave, ending diagonal. So whenever you see a market that should be in a higher time frame, fifth wave, and we have overlapping sections, we do continue to make new highs, but it continues to overlap. Good possibility it's making an ending diagonal. So I'm going to add some data onto here. That's a possible 3 and a 4. We should continue to a new high. Again, we have the overlap and then a new high. Because it's in the position to be a wave 5 and the last section up, we can consider that this is very likely an ending diagonal. I'm going to add some more data. Again, we came up, correction, new high, correction into the range of the wave 1, or what we've got labeled as a wave 1. A new high. If we come down and trade into the range of what I got labeled as a wave 3, more than likely we've completed an ending diagonal. Now we've come below that swing low. What does that usually mean? It usually means that this section is complete. And since this is the fifth section up from this low, it has the potential to have completed an ending diagonal. Well, certainly as of that time, the first time we had made a new high, then we came down and closed below the low prior to the high. Ending diagonal is probably complete. And this is very instructive. Number one, we were following this in our reports and identified this was probably an ending diagonal, fifth wave ending diagonal. And when it's complete, it would complete the higher time frame wave 5. And because it was an ending diagonal, usually the reaction is very severe after an ending fifth wave diagonal. Think of it in this way, that a market is struggling to new highs, but then it's making an overlap. So it's not an impulsive 5 waves. It's also called a motive wave, which is another type of overlapping trending waves. And they're usually only found as the final 5 wave trend of a higher time frame ending wave 5. That's again why they're called ending diagonals. So this is extremely valuable piece of information to have, because if this happened to be the ending diagonal, the 5 sections of overlapping up into a wave 5 of higher time frame, not only is it completing a higher time frame wave 5 where we would anticipate a multi-month decline, but it completed it on an ending diagonal, and usually the reaction against an ending diagonal is quite severe. So I'm going to just add a little bit more data on here. And there we go. We're getting close to the last data on this chart. So we've begun a higher time frame correction than anything within the 5 wave advance, and probably would continue to substantially lower lows, because this represents a capitulation of this bull trend, not just a normal ending 5 wave impulse trend, but a real capitulation is what ending diagonals infer should follow. So how should a 5 wave ending diagonal subdivide? How should each of these 5 waves subdivide? Well, here's a little bit where Elliott wave academics can get a little sticky and a little crazy, that they're supposed to subdivide in a perfect way. So I'm going to tell you how I look at it from a practical standpoint, because I'm only interested in using this information to make money, not to be an academic and to prove a point. So the waves 1, 3, and 5, typically considered impulse waves in a typical 5 wave impulse trend. And in a 5 wave impulse trend, they should subdivide into 5 waves each. In a ending diagonal, they can subdivide in 5, or they can subdivide in 3. So for instance, in this situation, and let me put some swing files on here, like so. This is just marking off what I call swing files, marking off the significant highs and lows. So before we go into the details, here's really the only thing we need to know. A section up, section down, a section into a new high, section down to overlap right away, and then we have a section up right away that indicates ending diagonal. Higher high, but an overlap on the low, and then another higher high. That itself is really all we need to know. We could even get rid of the bars and look at it that way. But knowing how they may subdivide will help us maybe to identify when that final section is complete. Okay, so we're back to waves 1, 3, and 5. They can subdivide in either 5s or 3s. Well, it's obvious I'd already subdivided. What we now know was a wave 1 of 5. It's subdivided into 5 waves. We can look at this, wave 3. That looks like a pretty clean 1, 2, 3, 4, 5. And then the wave 5, however, was just straight on 3 sections up. But it was 3 sections to a new high. So when I was describing it earlier, when it declined below this little swing low, well, that broke the pattern of higher highs and higher lows. It indicated that this section was complete, and because that was probably wave 5 of the ending diagonal, it was probably the higher time frame trend was complete as well, because it broke the structure. Ended up only being 3 waves instead of the 5. Now, how about the waves 2 and the waves 4? Well, they're corrections, and they should be have a corrective wave structure, either three waves like an ABC or some more complex correction. And again, the aftermath, take those swings off, the aftermath to a trend that is completed on an ending diagonal is usually fairly dramatic. In other words, it's usually pretty significant in price and time and a fast-moving, collapsing decline. That's if the ending diagonal was in the last section of a bull trend. Well, this is the ES data, the futures contract data, continuous data, and it's 240-minute data. And it's just a couple of months ago from the time I'm recording this. So while the ending diagonals are not frequent, they're frequent enough you really want to be aware of them. Because when they're finished, boy, what a great trading opportunity they offer. Because number one, you want to realize and understand that you're at or near the end of the trend of whatever degree and time frame you're looking at. And if it's ending, if the last section, the wave 5, is an ending triangle or ending diagonal, the aftermath is usually pretty brutal. So here we've got 240-minute data coming up off the March 4th low, possible 1, 2, and then 1, 2, 3, 4, 3, and a 4. And we're potentially in a wave 5 that'll finish this advance begun at the March 4th low. And it would only be like a 2-week advance or so. But a good trading, we call those trading time frame for several weeks or several days at least, between several days to several weeks. And as of the last bars on the chart, it's made a new high, and coming off of the last corrective low before the new high, pretty clearly defined 1, 2, and then a 3. Then typically it would make a 4 and a 5. There's no way we can look at this as if we've made the 5 sections up, of which the wave 5 should subdivide into 5 sections. So let's add some data. Well, as of the last bar on the chart, we've traded well into the range of the wave 1. We've had an overlap of that range. But because this is probably the wave 5 of the advance off the March low, and we assume that that's the case because we made a new high, now we've overlapped, more than likely we're making an ending diagonal where the wave 4 overlaps with the wave 1, and then we would make a new high. And I remember this clearly at the time, making a lesson about this with our DT Report subscribers. Higher low well into the range of the wave 1, but a higher low than the 2, and now we've made a new high. So we should be on alert that we've made new highs on these short-term swings that have overlapped. This is probably the last section up, and what it's done, at the least, we'd have a correction greater in time and price than any since this low, and it would be a correction of this entire 5-wave advance. So something we would want to be aware of. I'll just add some data on here. And there we go. As of the last bar in the chart, we've decline below the wave 4 of 5 low. We've probably completed the entire advance up from this low. Let me go ahead and label this. Probable 5 of 5. And since we've already traded below the wave 4 low, I'm not going to put a question mark on there. More than likely, that's the case. So I've added quite a bit of bars onto the chart following this potential wave 5 of 5 high. And then again, at least as of the last bar in this chart, we've made a much more substantial correction than anything within this 5 waves. And it's gone on for, looks like, longer than the actual 5-wave advance, or almost as long as that. So once again, this was really valuable piece of information to have, depending again on your trading time frame. But if you're a relatively short-term trader, you would want to be aware that even though the market is making new highs, is that once we've had these overlaps and a potential wave 4, and we're at new highs, this has a potential for being an ending diagonal, a fifth wave ending diagonal, and when it's complete, a fairly substantial correction against that ending diagonal is likely to follow. So before we leave our discussion about ending diagonals, I just wanted to make you aware that there is such a thing as a leading diagonal. In other words, a wave 1 or a wave A could be a leading diagonal. It's basically like this section. It would look like this, as 5 sections where the wave 4 overlaps and then it continues to advance. The reason I'm not showing you any examples of this, not going to talk about it anymore, is it's really, really rare. I'm not even sure I could find an example of it. I've seen 1 or 2 in 30 years, but they're so rare that I don't want you to get a prejudice that if you start seeing overlapping sections like this, that you're going to consider that it's probably a leading diagonal or a wave 1 diagonal. You'll probably never see one, so we're not going to talk about it. Let's take a look at some non-traditional corrective wave structures and see how, as they unfold, how we'd get a pretty good idea of whether a correction is being made or not and whether it's in a position to be complete. So let's take a look first at Bitcoin. We follow that in a report on a regular basis. A lot of people interested in Bitcoin, and boy, it seems to unfold in just really nice wave structures. So let's take a look at it. Reasonably up to date from what I'm recording this. This is weekly data, and just ignore these momentum cycles that are down below. You'll learn about those in another section in the course. And this is data up through February in 2021. We're going to add on to this real soon. But it's a potential that it's made 1 and a 2 and then a 3, here's a 4, and then into a new high. It's making a wave 5 high. And boy, that's a long-term, a year and a half more or less of weekly data into the new high. And the consequences of completing a wave 5 high are pretty severe. Bitcoin and some of these cryptocurrencies that are widely traded, boy, they make some tremendous moves, but when that trend is over, get out of the way on the downside. So let's take it from here and see where we're at. This is the February high. I'll go to the daily data here. And again, right here is the February high. I'm just going to show you data how it finished off, and then we'll take finished off this bull trend anyway, and then we'll take a look at the potential correction. So coming up from the January low into the February high, it made this beautiful 5-wave advance for potential end of wave 5, but then it declined, new high, higher low, higher high. And what did you learn about this? What is this? Well, it's probably an ending diagonal, and that's what we recognized that was being made at the time. Again, I probably should have used this in the ending diagonal example section because it's so perfect. Now that you know about ending diagonals, we'll just assume that as of that April high, and where we'd come down and we'd trade below the swing low, that's the first signal that it was finished, and this is the confirmation when it traded below the March low, is that more than likely completed about a little over a 1-year advance with the final section and an ending diagonal. What usually follows an ending 5th wave diagonal? Well, usually a pretty severe correction against that bull trend. So there we go. That's where we have our daily data through. So more than likely, let me put this on, and then we're going to see if indeed we make a correction. Something along those lines. And again, during this time, I know this is an after-the-fact example, but during this time, certainly looked at this, as you saw in the daily chart, was broken down into 5 waves as potentially a completed wave 5. But of course, we came down, and then we went to a new high, so we had to kind of reorient and say, well, more than likely it's a 1, a 2, a 3, and certainly when we traded into the overlap of 4 of an ending diagonal, and when it's complete, probably going to have a pretty severe correction, something greater in time and price than either the waves 2 or 4, which themselves are only 2 to 3 or 4 weeks. I mean, pretty modest declines. But let's take a look at what. First, we'll go back and say, if this has been a 1-year advance, there's going to be more than a 2 or 3 week correction once the 1-year advance is complete. So let's go back to our daily data and look at it as of the time we made this initial decline. And I'm going to, no, just leave it like this. Let's put some labels on here, just something logical. This is definitely an impulsive decline, isn't it? An impulsive decline to below this swing low. So whenever this is done, this wave 5, I should have a question mark. Whenever it's done, it should be a wave 1 or a wave A, because you should not have a correction that is complete on 5 sections, as we know. So we'll put that in there. Then I'm going to add some more data onto this. So we're going to assume that it's done. Let me clean this up a little bit, like so. I'm going to take these swing files off. We don't need to have this much data on the chart, because at this point, we're only interested in what's going on here. Let me add a few more bars here. We are certainly in a position to make an A, B, and we're in a position that we're making a wave C. Have we completed an ABC or an ABCDE, or what is this? Well, we could get paralysis of Elliott wave analysis, and we could have a couple alternatives here. Probably the best one, as of this point in time at least, would be, let's call this an A. Actually, it would be a higher time frame A. We'll make it the darker A. And then a running A, B, C. Again, a variation on the A, B, C. And this would be your B and a potential C. Let me get rid of this guy. And that all makes sense. Kind of the point is, as of this bar, this section, and this correction is probably complete. Let's add some more data. So this was not an ideal ABC, but it had the basic structure of an ABC. And then we had a decline to a new low, which signals more than likely this correction is complete. And more than likely, we've just completed a wave 2 of B. What does that imply? Well, it implies that this decline is likely to continue to well below or below the wave 1 or A low, and a similar sort of wave C, if not greater wave 3 on the downside. So more than likely it has quite a ways to go. So our lessons here are: 1, ending on a ending 5th wave. 5 waves down should not be the end of a correction, should be a 1 or A. We should have a corrective structure that follows. We had a potential A, B, C, but then we went sideways a few days, made a new high. So we have to recognize that this is a correction, had the potential of an A, B, C flat, and then a C, and that was in a position to complete the correction. And of course, following this day, it should be complete. And there's could be fairly dramatic on the downside. Remember that this wave 5 was an ending diagonal. So we should look at a minimum of this as being an ABC, and probably will continue a lot lower. Guess what? This is the last day of data as of the day I'm recording this. So once again, I don't know if this pattern is going to be fulfilled to the downside in a fairly substantial decline. But if I'm going to use Elliott wave, and if we've got this right as a probable ending diagonal, we probably have a long ways to go on the downside in Bitcoin as of early May 2021. Let's take a look at a related chart to that Bitcoin chart. This is GBTC. It's an ETF that follows Bitcoin. Sometimes it trades at a discount, sometimes it trades at a premium, but it basically follows the trend and the reversals of Bitcoin itself. Very high volume. A lot of people trade it. Well, as of the high where my cursor is, that was at 5-wave advance off of the wave 4, which originally in Bitcoin appeared to be the wave 5. Of course, then we had a correction, and then a higher high, higher low, higher high for an ending diagonal. But the GBTC made the correction, but it didn't make a higher high. At this point is where Bitcoin itself had made a higher high, but this is a lower high. So we're making a different type of pattern in GBTC. The end result is going to be the same, though. Let's just say we weren't looking at Bitcoin, though, which of course we would be if we're trading an ETF. Let's just say we looked at this as a 1 or A, and that this is a probable ABC. Really nice ABC there. Let's add a few days of data on. We've made a new low. Have we finished a wave 2 or B? Well, if we're just looking at this data, we'd say yes. And by the way, can this be a 1 or A? It's got some overlaps. Well, as we know, an A can be a ABC. And also, if we look at closing data, 1, 2, 3, 4, 5. Pretty nice on closing data. Let's add some more days on here. We've already come back up and traded quite a bit higher. We've come up to test this high. So ABC, probably not. What would this be? Well, we're making some sort of complex correction. What are complex corrections? They're usually series of ABCs that are connected. Now, they could be connected by X waves, for instance. And if this is the case, an ABCX, we would probably make another ABC. Maybe it's done. Let's just see. Nope, not quite. So what is this? This would be. And by the way, I understand all of our examples, of course, are after the fact examples, but this is what we're looking at the time, understanding that while Bitcoin was making a new high and a probable ending diagonal, this should be, even though it's lower highs than the February high, should be some sort of correction. And then we've declined below the wave B. More than likely, we've completed an ABCX, ABC. So the key here to keep in mind is that complex corrections are usually series of ABCs. So if we get an ABC, and then we get a decline, and then we continue up, more than likely we're going to have another ABC. So we always want to be aware of when a market's in a position to complete one of these ABCs, it's in a position to complete the higher time frame. Again, new lows. So ABCX, ABC, 5-wave decline, impulsive decline. Do you remember what that was? In Bitcoin, well, that was what we called the wave 1 or A. So this could be a 1 or A, 2 or B. This could be a 1 or A and a 2 or B of a wave 3. It's always nice to look at the ideal examples, but what we want to do is look at everything logically. Logically, what does it look like this pattern's making? And if we have a market that's closely related to another market, for instance, in this case, an ETF that just trades one other market like Bitcoin, their pattern should be similar. One may be relatively stronger or weaker. One may be at a premium or a discount, but they should be making their trends at the same time. So we can kind of look at one to verify the position of the other. Boy, this is just a beautiful, even if we weren't looking at Bitcoin, we're just looking at this data, a beautiful one or a beautiful complex correction, double three we call it, impulsive decline, A, B, C, D, E, for another wave 2 or B. What should follow? Another decline, somewhat similar to this decline in time and price. So probably has significantly lower to go. This is the Euro daily data. Let's take a look at this. It's another fairly recent example, and it's a great illustration as how you want to follow along bar by bar, identify what the probable position is, and what the market can do to either confirm or invalidate that position. Well, we coming off of this high last January, just had a beautiful ABC decline. Potential wave 2, if this was a wave 1, wave 2, and we'll just make that assumption that that's the case. It was a pretty significant high, which we anticipated would be followed by a correction lasting several weeks. And here we came down for a month, a perfect ABC. We did make an advance well into the range of the wave A, which is our first signal that ABC could be complete. And then we had an advance, correction, and then it advanced to a new high above this swing high and above what I got labeled this wave B high. So a possible 1 and 2, the beginning of another bull trend, another impulsive trend to a new high if this completed an ABC wave 2 correction. Well, if that's the case, if this trend is bullish, what should it not do? That's one of the questions you ask yourself. What should it do? What should it not do? Well, let's hit our close button here, and then let's draw our horizontal line across what I got labeled a wave 1 closing high. And the euro should not close below the wave 1 closing high. And if it does, what's going on? Does that void the impulsive trend? Well, it certainly warns us that it's not impulsive, that something else is going on, that this is part of a correction, and since a corrective rally, then that would indicate a new low. Well, what could this be then? This was just 3 sections. Well, this could be part of, if that were to occur, part of a complex correction. We certainly have to get rid of this wave 2. Let me add some data on this. There we go. The next day, what happened? Big decline, well into the closing range of the wave 1. This should not be a 1, or probably will not be a 1, probably not be a 2. This will be either an A, B, C. Well, it should be A, B, C, and then it may be part of a more complex correction, but something else is going on other than an impulsive bull trend. So let's take that off. What could it be? Well, it could be, this could be an A, B, C. This could be the separator, a wave X. I mean, there's other alternatives. I always try and look at it most simply. An ABC, this could be ABCX, and then we would have another corrective decline of an ABC or something similar. Let me just add some data on here. Well, that is exactly what happened. And what if this is an X, can we finish this off in a 5 wave? It should be at least an A and a B and a C once again. Remember, series of ABCs. and what has probably occurred. Once again, probable A, B, C flat, and then we're probably making at least a wave C, if not even something more complex. Well, there's the follow through. It looks like we've exceeded this high, at least as of now we have. So let me add this data up here. What I want you to really be able to do is quickly recognize the potential pattern, recognize what it should not be. That's as important as what it should be. So once we made this ABC correction, we had to label it as a wave 2. Once we made three-wave advance and then closed into the closing range of this initial advance, is that this was probably not making an impulsive advance, certainly not the beginning of a wave 3 as anticipated. If not, what could it be? Well, this could have been an ABC. We have a separator of an ABC correction, and that would indicate that we should have at least one more ABC decline to finish off what we call a double 3, an ABC X ABC. So potentially, now we've completed this high, we have completed this higher time frame correction. That's potentially a wave 2 or some sort of correction. We've gone up and taken out this high. It still could be. This could be another separator. Could be another X wave. And I haven't added all the data on up to date. The point is it could be, but more than likely we've completed a whole correction or beginning an impulsive trend to new highs. Here I just wanted you to see one more non-typical correction and how hopefully you'll be able to distinguish early on whether it is or is not complete. This is daily data of IGN. It's a network sector ETF. Let's take a look at this chart because there's a lot of great lessons to be learned about identifying if a correction is complete or not, and how we look at it bar by bar and decide what will confirm the continuation of the trend and what will invalidate it, and what will change our assumption of the position of the trend. So I've got quite a bit of data on here going into a really strong trend into this April 2019 high, and of course I'm only showing a few months of data before that. We had an idealized 5-wave decline. At the time, we would have looked at it as a 1 or an A. Then we had an almost ideal ABC correction for a probable wave B. And then again, another impulsive trend to below the wave A low. And I don't have it broken down. We could easily look at this as 5-wave decline for a potential A, B, C zigzag. And then we had a 5-wave advance, which is exactly what we would anticipate following a correction, an impulsive trend up as an probable wave 1. Of course, it's well into the range of the wave A, ABC correction, and then again another advance to a new high. Are we beginning an impulsive trend to a new high? Possible. But if we trade into the range or close into the closing range of this wave 1, then this 1 and a 2 are questionable, very questionable. And it's probably not a 1 or a 2. Something else is going on. Let's add some data, continuing to advance. Oh boy, now we're closing down considerably into the closing range of a wave 1 after making a new high. And there's just other reasons to suspect this was not a wave 3, not a 1, 2, and then this is a wave 3. Something else is probably going on. What could it be? Well, it could be that this ABC could be a higher time frame A, couldn't it? Because A's can be 3 sections or 5 sections. If that's the case, then this should be a corrective rally, and this would be an A and a B and a probable C of a correction, an A, B, C, B higher time frame. Let's take a look at it as if this were a possibility and see if it continues to work out in a way that would confirm or invalidate that. So we already had a warning here that this is a corrective advance, not an impulsive advance. And that has some fairly serious consequences in that this is either, and we could look at this as an A, B, C, D, and an E to a new low, or an A, B, C, and then we're making a wave B here. Either way, whichever one of those it is, eventually IGN should continue to a new low. Let's add some data. Well, now we made a new high, so we've got a higher high and a higher low. More than likely, I always want to keep it simple. So one explanation for that is this is a D, we're making an E, and when it's complete, this correction would be complete. This would be an A, B, C, D, E correction, the second most frequent type of correction. A new high, very nice, quite a bit new high there. Oh, and then we turned around and came right back into the range of this wave C. So more than likely, and I added on a lot more bars we need to after this bar, it's a warning that it's finished, that we have completed. Let's just label this again. That is a possible A, B, C, D, E. Again, 5 sections, overlaps. If that's the case, we'd anticipate that this completed a wave B. And what should follow? Well, another section down, a wave C to a new low below this August low. What would be the initial signal that this is a beginning, a bear trend to a new low? In other words, a higher time frame wave C. Well, an impulsive decline. So far, it looks like that. 1, 2, 3, maybe 4 and 5. It's not finished yet, but a confirming signal would be a close below what I've got labeled a wave D closing low. And of course, if it continued higher, then we would have to look at this as some kind of even more complex correction, because the one thing this should not be is it part of an impulsive bull trend. That's what it shouldn't be. So let's continue to add some data on here. And there we go. As of the last bar in the chart, the outcome was as anticipated according to how this market was unfolding, the pattern was unfolding. Is that more than likely this was a corrective advance, and when it's complete, what follows a correction? Again, keep it simple. A resumption of the trend prior to the correction to a new extreme. So it ends up probable ABC, probable A, B, C, D, E to finish a wave B correction down to a new low. And we had a fairly early warning that that was the case, that this wasn't a completed ABC and this wasn't an impulsive trend, and that we had an impulsive trend up, correction, and then I call this a struggling impulsive trend up to a new high, and then came down sharply in closing into the closing range of what ended up being a wave A. So once again, as a market progresses, keep your question marks on some of your labels until they're confirmed. And as soon as a market is indicating that your assumed wave count is not correct, very quickly admit to that consider what the alternative is, and then how the market should unfold given that alternative.